Hello. What's going on, everybody? Welcome now, Stock Trades. How's everybody doing? All right, guys. This video we're gonna be talking about some things. I've updated some portions of the stock terminal. We're gonna be doing some analysis, and hopefully, we'll look at United back in the day, and we'll draw some parallels. But before we start, I want to take a moment. And if you have any questions, drop them in the chat. I want to take a moment, guys, and just respond to one of our subscribers. I don't remember which video it is, but let's see if I can find it here. Yeah. So let me just go ahead and it's probably in the Vokes. Yeah, it's probably the Vokes. All right, so let me take a little screenshot here. So about a day ago, 2 days ago, I made a video about UnitedHealthcare, and I kept on saying, God damn, right? I kept on just repeating that. And one of our subscribers saying, hey, man, the language filter broke today or something. God deserves more respect. And I just wanted to take a moment and, I commented, I totally agree. United Healthcare dropped as low as $250 today, right? And, if we look at the, technical chart, it dropped as, oh, no, that's Humana. It dropped too, but let me just look at that candle. Humana dropped as low as $248.88. And, the point is that, the guy's right. I feel like the past couple of days, I feel like I've had my head stuck up my ass. I just wanted to just point this out. There's a lot of people losing money right now, right? There's a lot of people losing money. And, yes, we're going to win. Yes, Clover's MC. I mean, just like what that analyst was saying, when everyone's zigs and zags, Clover was always doing something. And yes, this is going to bring a lot of opportunity to Clover, just like Humana pulled out. United might pull out, and then Clover's going to be able to grow. But just for a sec, let's just kind of talk about this. There's a lot of people who have their investments in pension funds when it comes to United. Okay. And there's a lot of people who are hurting right now. So yesterday, if you guys don't recall, I was wearing, my hat, and I don't think I've ever worn my hat in front of you guys. I think the last time I wore it was when I got into medical school. And let me explain to you kind of what this means to me. Okay, so so I think Ken was it, was talking about, what why do you have a kippah? Like what? I thought you were Mexican. So let me just, as you guys have been watching me for a long time, let me kind of give you a little bit about myself, right? So, my father is Greek Orthodox. It's like a stricter version of Christianity, right? Very traditional. And my mom's Jewish, right? So by heritage, I'm a Jew, right? However, I did accept, Jesus Christ as my Lord and Savior. My significant other is Catholic. But when I wear this, it first off, it reminds me of my heritage, and it allows me to remember that no matter how high I get, no matter how much money I make, the golf courses, the money, the millions of dollars, I always remember that there's always a God above me, and that I'm never above God. But it also reminds me of, Jesus came from the same heritage that I came from, right? And he walked a path of adversity. Now, I'm not saying no one can say they walked the same path as Jesus in terms of the pain he felt, but I feel so related to the pain that he walked. Um, that um, ultimately it kind of led me to the same destination, which was to accept, the Father, the Son, and the Holy Spirit. Um, the reason why I'm mentioning this is, the past couple of days, I felt like I was hot shit, right? Called out, um, you know, the destruction of value in healthcare, and it was playing out. But ultimately, it's almost like, Oppenheimer discovering the atomic bomb. Obviously, not to this degree, but there's about 400,000 employees in UnitedHealthcare. A lot of them have stock in United. They've worked their whole lives. These are not rich people, guys. These are normal folks like you and I, and they're just lost a lot of their money. There's people that invested. I'm having folks that, like, oh, I buy United Healthcare because it's a safe stock. It's too big to fail, and I hope the stock survives, and I hope honestly I don't care about the stock. I hope they survive. I care about the people, right? Screw this fraud company, right? But I care about the people, and just the past couple of days, I just felt like I had my head up my ass, you know, like, oh, I've been calling out. I just it's just a reminder. I felt the same way when I got into med school, and I just kind of remember like, hey, just there's always a God above you. I'm human, and there's so much more to this, right? There's so much more to this than we just kind of let on. Um, so it's nice. I kind of use this. I guess you can call it almost like the Clover Assistant, right? I use this as like a spiritual technology, right? Almost like meditative to remind me. I kind of feel it on my head. It's like, hey, be humble. Don't let your ego get ahead of who you are. It's kind of like what J. Cole was saying. You came a long way, but you went the wrong way, right? So, um, I get it. I don't want to take the excitement from the room, um, but it's just, we have to put God first, and we have to be humble. Again, yes, what's it good making all this money and then you have people suffering, right? Um, I hope the most people are going to get hurt. I mean, that's just Wall Street. I've seen this play out with all the companies. But let's hope that these patients find better healthcare. Let's say these patients and these employees, these poor 400,000 employees. I hope they find because who knows what happens if they start doing layoffs? What happens if the dividend gets cut? The stock might fall down more. I don't even know if the dividend gets priced in, right? Hold on for a sec. Um, so it's there's so much uncertainty now in United. There's so much uncertainty, guys. So anyway, just wanted to kind of put this in perspective. So I guess when you see like when Clover starts rising, I may need 10 of these, right? So I mean, I just to kind of push this shit down to remind myself to be humble, right? Because we're this is going to be life changing money, and a lot of us are going to be making 300, 500, $2 million a month. And if we're making that kind of money, guys, I mean, this is not a lot of people get to. I mean, where you're going to be making a neurosurgeon salary in 1 month. I mean, that's just crazy. Okay. Just understand that, right? So with that, if you can, put God first. And if I could just, because what's good of me teaching you how Wall Street works, and then I let my ego get in the way and I push us in the wrong direction. No, that's not the promise I made God before I left the streets, right? So anyway, uh, back to the analysis. Let's see here. First midday live. I know it's crazy. I usually do it later. I know. I just was. Oh my God, the United was insane. Well, for East Coast at least. No, absolutely. I love my East Coasters. Right. You guys have some pretty cool. I mean, you guys got some good food, right? Shout out to South Carolina. I enjoyed my time in South Carolina. By the way, had some nice that seafood place by the dock. A mussels there. Oh, it was to die for. It was so freaking good. Awesome. Not to be. Yeah. The only they only have a Kramer. Oh man, and he said he doesn't want to hurt anyone. Yeah. Let's see. Clover is teetering in the green. We're going to talk about this. Vlad, to be fair, people losing a lot of money is mostly Wall Street. I'll need to double check institution. No. Of course, there's a lot, but a lot of people like what? Yes, institutional owners own it, but what they do is they take that and repackage it in investment plans, so which retail investors buy. It's complicated, but retail is going to get hurt on this. Lunch with Al and Clove Crew. Let's go. I told work I have a doctor's appointment. Oh no. Looks like Toots on about 90% United. I feel bad for the people getting fooled into buying the dip. Well, the thing is, if you calculate the value, technically it is undervalued, right? Based off of undervalued metrics. But the problem is, it's like Enron. If there is seriously fraud, then can this free cash flow be sustaining? You get what I'm saying? Right? Let's see here. Now I see what you're saying. I mean, Shant, your argument, I can't fight your argument. Your argument is right. Your argument's right. Right? Yeah. Yeah, I know. I definitely saw that. He's not replying to me. It's okay. Later on, I think it's because he's chasing accounts that have over 40,000 followers, which I understand. It's fine. I will let my portfolio and my methodologies and my software that I created here, I'll let that speak for itself. And later on, eventually, things will uh, move where they need to be. Those United people didn't care when they were denying claims and getting richer. Well, yeah, but it was the people at the top. There's janitors there. There's a lot of people at the bottom that they just doing the job, right? They're just trying to help. They're just trying to feed their family, right? Doesn't want to give attention to Clove disrupting his holdings. Yeah, it's true. That's true. Dang it, Al. Don't make me reflect and feel bad for UNH investors. I just, it's just we can't lose our humanity. Okay, we really can't. Okay, let's hope that this is a wake up call to UNH that they need to get. Well, hopefully they might work with Clover and they get a good software and those patients get the best care and all is happy. Hopefully that'll be the most ideal. I would say. Or yeah, well, you can say they're complicit, but a janitor, I get what you're saying. I mean, but two wrongs don't make it a right. You know what I mean? You get what I'm saying? We all get big heads from time to time. That is what makes us human. Noticing and reeling it back is humility. Absolutely, and we have to. You have to. Just because I remember when I had nothing. When I had less than $50 in my bank account, I remember when I had nothing, guys. And I'll tell you, just because you have money doesn't make you better than someone else. I mean, it's just okay. It's just that it's fugazi. It's printed. You're worshiping printed money. You're worshiping a false prophet. Okay. So just just from my humble experience, right? Even I get ahead of myself, and yeah, sometimes I gotta cool my shit down. So yeah, shout out to you, brother. For commenting. I appreciate you. I wish I had your name here, but I think it's just the username. So I appreciate you. Thank you. Right. That's it. You guys, you always keep me humble, right? Because what's the point, right? Um. Uh. So now that we talked about this, let's see what's going on. So apparently, yeah. So apparently, I guess we turned green on the day. That's interesting. Um, we're down a lot, guys. We're down a lot. I mean, watch. You know, you know, you know, just a couple months ago, I mean, we were at 1.4, and we've dropped. We've dropped a lot, and so the question now is, yeah, this looks like a downtrend, but this from here, um, potentially looks like an uptrend. We'll see. Um, the Federal Reserve spoke today, and they're thinking because of the PCE came and it was the lowest since 2020 that they may have to revisit the interest rates. So I believe interest rate cuts are going to happen, and that's going to ultimately help with small caps, help with Clover, et cetera, et cetera, et cetera. So my neck is killing me. So so there's that. Yeah, UNH guys. Let me just update it to make sure it's slowly rising. People are buying the dip here, but this thing has just been. I mean, I've never seen this before. I mean, just like a big cut, in a month, it lost half of its money. That's a lot. Um, it's $240 billion market cap. I mean, it's just got its market cap got cut in half. Um, yeah. Clover now. Let's update Clover. Clover's at 332, positive on the thing. It's about 6% up on the year to date. Clover is year to date. Holy shit, is 47.46%. Humana. Interesting. It's not green. Wow. So if you would have invested in Humana 5 years ago, you would be down 43%. If you would have invested in United 5 years ago, you would be down 8.89%. Holy moly, guys. Right. So what I'm going to do is I'm just going to give you a couple of thoughts. Okay. There's been a lot of there's been a lot of folks that were saying, we're going to drop, but there's recessions and whatnot. But from what it looks like, it seems to me that we are about to make new all-time highs in the S&P. Now, I still believe that. Let me just see if I can make this bigger. I still believe, ladies and gentlemen, that this was my prediction. We're going to go up and then go down, but we've just been popping up, and yeah, it may seem as we're going to make new all-time highs, but I'm thinking we're going to get slowly some consolidation weakness. Obviously, we're reversing on the MACD, but I do believe we are going to be getting some form of weakness. So I expect some form of a drawdown just to equilibrize on the S&P. And then ultimately, ladies and gentlemen, we should return to record level highs. I would say in late June to late August. So about in the next 3 month cycle, we should be getting to new all-time highs, which obviously is great because it corresponds to Clover Health's Q2 earnings, which I think are going to be profitable, right? So again, I'm trying to conglomerate all this data and kind of put it together in a easy digestible pill. Just from my experience, what I'm seeing and the data I'm looking at, right? So obviously I believe we're going to get a short-term pullback, right? It's just the S&P needs to consolidate. But the uptrend remains intact. We're going to have falling rates, right? And it's going to, obviously, tech stocks are going to outperform. We already are, based off the earnings from Google and whatnot, we're going to basically start seeing CapEx investments in AI. And then 2024 4 and 5 is kind of like, who's selling the chips? AMD, let's say, Nvidia, okay? And then, okay, who's using the chips? Right? Like the large language models, Meta, right? You know, um, OpenAI and Microsoft, right? The next level is the iteration, almost like, you had, um, the computers, then the iPhone, and then what's inside the iPhone, the application. So, what are going to be the application use bases of the AI, which Clover is doing? Palantir, we're starting to see, is using it, right? So, Clover is the application of AI, okay? And, so that's kind of the, I think that 2026 is going to be our year, is what I'm trying to tell you. So, the big thing is we had a lot of fears regarding recession, supply disruptions, which are all valid, right? Rising volatility. A lot of people were saying that this is the end of U.S. Exceptionalism. That a lot of people are going to be reducing their exposure in the United States and start to invest broadly. And what they did ultimately is they started shorting cyclicals, right? They started shorting small caps, right? And they started to de-risk from America. Obviously, this was, in my opinion, complete bullshit. You are de-risking yourself from one of the most advanced civilizations in the world. In America, we have this beautiful tendency to always improve. It's a God-fearing country. We're even in our Pledge of Allegiance, under God indivisible, for liberty and justice for all. We don't give up. We keep fighting. We work when we relax. I mean, just look at me, right? Someone who came from homelessness built a freaking stock terminal, right? That's the power of the American dream, right? And then being able to share that so others can make the same money, right? I believe personally, America is still a beacon to invest in, and all of these, we got Ray Dalio. Someone said Ray Dalio started his hedge fund in his 2-bedroom apartment. Google started in a god freaking garage. I shouldn't say the D word, right? I caught myself there, right? It started in a garage, right? So, so JP Morgan dropped their US recession calls. So we're back. Okay, we're back. Now, if you combine everything, guys, simple. VIX increases, people fear, right? People deleverage, VIX drops. What's going to happen? People start buying, right? It's a common cycle, and it's just one of those things. The question is, what do you buy? And that's when it comes to intrinsic value, right? That's when it comes to trying to understand what the stock is worth and all these things, right? In fact, guys, if you go and listen, $18, here, $18, stock dropped, right? So I mean, sorry, the VIX dropped. So this is great. I mean, right now, I'm just waiting for this thing to, go below 17, and it will, right? So there's that. There's United. Here's Counterpart. We're going to listen to Counterpart in terms of what they're saying. For folks that are interested, there'll be a link below, alstocktrades.com. Coupon code SAS will be expiring soon. We'll get you $1,200 off our lifetime access to our software, our courses, our stock picks, our members that have over $45 million of net worth, and I believe soon will become billions of dollars of net worth. Interestingly, I have to admit, this pinned post has about 89,000 views, which is quite interesting. 89,000. And that's quite interesting, right? Likewise, ladies and gentlemen, if you were to look at Fintel, let's just move Fintel here. you could see that Clover's institutional ownership is now 23.88%. In fact, about was it a million shares now will be owned by institutions. Is that what I'm reading? So you're starting to see, because it was just at 19%, 20%, 21%, 22%. Um, so I think you need a UNH discount code. How many shares? That's so true. I mean, right? I think yeah. Jesus. I mean, with the stocks, I mean, there's a lot of people losing money right now, guys. Let's drink some nice cold brew. But yeah, so very quickly, institutions are buying. In terms of how many shares we got on the lifetime, yes. I don't want to show the link because then people can fill it out on YouTube. I don't want people that are outside of our lifetime access to fill out the link. But C's, we have a link, a survey response in the Discord for lifetime members, and you press on the link. Gordon has like what 3 million shares. It's crazy. We press on that link and you fill in the your share ownership so we can see the overall net worth of how much we have in terms of the net worth of our platform. With a 30% response rate, we had more than $45 million, which is insane, right? We'll go ahead and look at the Q&A on the next video. I completed the survey already. Excellent. So we'll see what the results are. I need to push it out more on our terminal. I've been frankly quiet on it, so probably I can increase the response rate. Shout out to Jake Crazy for helping me set it up. And obviously Relentless and all you folks, I appreciate you for helping with this mission, right? Which is to democratize financial literacy, right? Because I'm tired of the poor getting poorer. I'm tired of this, right? I know you are too. Who's tired of having to wake up in the morning, leave your family, and come home at night to see your kids already asleep, and you here slaved away to earn just a fraction of what the value that you created, right? So, excuse me, on nose itches there. Yeah. So, institutional investors are buying the dip. Right now, I think personally, Clover, Clover bought at $3.60. They bought 18.2 million. Likewise, they increased their treasury stock, and instead of selling the treasury stock to use the cash to buy, to use the cash to pay taxes, they kept the treasury stock and they used cash instead, which should tell you that they believe Clover is undervalued. So institutions, I think now as this dip happened, they use this opportunity to just buy Clover and collect Clover. Retail probably was like, oh, Clover, it was going to go down to $2. And they probably sold to try to day trade. And they, listen, guys, I buy and whenever I buy, I remove stock from the tradable pool. It's like I eat them. There's a lot of people out there like me, like just keep eating, right? And there's going to be a point where there's not going to be any more sellers. And that's when the stock price, especially when it's become profitable, right? Am I not going to have my own lawn much longer? Wait, what's going on? What? Wait, am I not going to have to? Oh, I didn't say mow. You're not going to have to mow your own lawn? Man, I mean, you're not going to have to, but isn't mowing a lawn fun? My favorite is to watch these YouTube videos of those folks that do the lawnmowers, and they have those little things, sticky things, those little thing with the wire that goes on the edge. Oh man, that's so satisfying to watch. And it goes, and it just kind of cleans up that edge. Man, I can watch that all day. Right? I love that machine. Right, Rob, what are used gonna do when you have someone?
Robert, are you gonna do when you have someone doing chores?
Yeah, I mean, hopefully, my mission is hopefully he'll have more time to find God, right? So that's kind of like, more fine, to see the beauty of Mother Earth and then, be able to enjoy and go on vacations and hang out with lifetime access members and, smoke some cigars get some good exercise in, good food, right? Right, get to love your wife more and stuff like this, right? I'm going to be taking care of my body, mind, and soul. Excellent. Excellent. And then, have more time with your son, be able to play video games with him, stuff like that, right? It's, life is short, guys. Life is short. So we're going to essentially be able to buy back time, right? All right. So I'm just making sure I have all this. Yes. Okay. So, ladies and gentlemen, this is our long range beta. I have not released it to the lifetime access members. I'll explain why. But if you go to UNH, this gives you the data from 1985. Okay, and you can obviously scroll from 2024 to 1985. Obviously, with quarterly, you can see that we got all the way to Q1 2025. So, 2025 minus 1985, we got about a 40 years of data here. And what I'm trying to show you is just kind of the data organized in a great fashion. In fact, if you were to look at the AI summary here, the net income the net income, let's look at operation cash flow. So I will be releasing, ladies and gentlemen, I will be releasing this to you all. It'll be a long range, right? And I'll be releasing this to you guys so you could look at kind of and study the trajectory and the historical financials of any stock you want, which is cool because look, and net income in 1987 was negative, and 1989 turned positive, and 1998 turned negative, and 1999 turned positive. Now, you don't believe that, but United was actually unprofitable in the beginning. Now, I want you to look at overall, the gross margins used to be insane, but back in the day, United, when it first was publicly traded, they had a revenue of only $100 million. They didn't really have a lot. Obviously, $100 million back in the day was a lot of money, right? But you could see the growth rate was insane in the beginning with United, and you could see that net income wise, I would say Clover is at 1992. We're at 1992. We're about 1.4 to 1.8 billion. So we're between 1992 and 1993. If you look at these kind of two numbers here, I'm going to highlight them here. Let me zoom in. Well, first off, let me open up the here. Let me zoom in here so we can see. Isn't this pretty cool how we have all this data? You can see net income was around 114 million to 194 million. Guys, I think that Clover has a very high probability to get to this type of level in terms of its overall worth. I mean, that's insane. And if you look at the share count for UnitedHealthcare, the share count was around 1 billion to about 1.2 billion. So Clover actually has around 496 million. So they have half the share count as United back in 1992 and 1993 when United was around 1.4 to 2.5 billion dollars in revenues, right? So the point that I'm trying to tell you is, and again, most people, like for example, Dividend Dude, he doesn't have access to this material, right? Again, he's 19 years old, right? So I get it, right? I get it. Later on, what's going to happen is that a lot of people are going to start to, for the folks that talk about Clover on Twitter, a lot of you guys that are advocates, market cap, all you folks, we're going to get so many followers now because It's like the meme, right? Nobody wanted to buy S&P at 4,700, but everybody wants to buy it at 6,000, right? And same thing is going to happen with us. Nobody wanted Clover now, but when Clover's 30, 40, $50, and I'm like, oh my God, it's amazing. We got to buy this company. It's AI, it's disruption. Again, I like to find companies before they go big, and I like to use data-driven tactics that Wall Street uses, and I just so happen to create a software to be able to help you become a millionaire like me. Okay? And I know it works because I went from homelessness to becoming a millionaire. I know others in my platform have become millionaires as well. So the point is, you can see that the net income is around 7,414, but look at the free cash flow, 111 to 166. So if we were to look at UnitedHealthcare back in 1991, and this is what's crazy. It shows you the crap. So, but 1992 to 1993, we're going to look at what was the stock price of United. Okay, I want us to do that. Okay, but I want us to keep in mind that that's kind of where Clover is right now, 1992 to 1993, where we should be expecting net income in the next 2-3 years around 114 to 194 million, and a free cash flow of 166 to 223 million, which is what we were calculating, remember, in terms of doing the OCF calculations. Okay. But what I want you to do is whatever stock price I show you in 1992 and 1993, I need you to multiply it by 2, because these are divided by 1 billion to 1.2 billion outstanding shares. And you and I both know that Clover has around half of that. So let's see what the stock price was for United back in 1992 and 1993. So in 1992, UnitedHealthcare was $2.73. And in 1993, it was $4.74. So if we take $4.74 and multiply it by 2, I did that wrong. $4.47 and multiply by 2, you get $8.94. Okay, so you get $8.94, and obviously you have to adjust for inflation, right? So that's probably maybe 2-3x, if that. And obviously Clover is taking market share from the big boys. So what I'm trying to share with you is we are in the early stages of Clover. And it's like, I'm going to be real with you, because remember how I said you have to divide by 2? So we have to find when Clover, we have to find when United was trading at 30 cents, and multiply that by 2, which is 60 cents, which when 60 cents is when it dropped Clover. And since Clover has about 497 million of outstanding shares, and United at the time had around a billion, we divide by 2. In fact, we should divide by more because they had about 1.2 billion, but still. Let's find when United was 30 cents. Right here. So last year, for the folks that invested in Clover, it's like buying a potential UnitedHealthcare back in 1989. Back in 1989, it was like buying a potential UnitedHealthcare in 1989. And listen, this is not even inflation adjusted, right? But you can see if you want to look at from number to number, a mano to a mano, right? So I'm just saying, because this is adjusted by the market cap, right? By the market cap, right? And then, ladies and gentlemen, this is all not including SaaS. A lot of people lost a lot of money. I mean, if you would have invested in United back in 1985, you would be up, 181,000%. Now it's dropped to 78,000%. That is a lot. And again, no one wanted Palantir under 10. Everyone wanted it when it was over 50. And now everyone wants it when it's over 100. Congrats to all the dip buyers this week. Why are we congratulating? Where's Clover now? Oh, wow. Let's see the portfolio. Oh, look at that. Look at that. It looks pretty damn good. Good. Excellent. Excellent. So, you see this now? So, now let me explain to you guys the danger of this, United. Let's look at dividends. Let me unhighlight all this so we can focus on dividends. If you look at dividends, United needs to increase their dividends. And it's a bit scary because what happens if they suspend their dividends? If you look at Humana historically, Humana was free cash flow negative in 1998. Then it turned free cash flow positive in 1999. Then in 2000, it turned negative in 2000. And then in 2001, it turned positive. I mean, again, guys, this is not rocket science. Let's look at Humana back in 1998 and around 2000. So you can see 1998 it was 26 right dollars, but then it turned negative. What happened to the stock price? It collapsed by half, right? And then it turned positive. Then you had the dot-com bubble crash, which dropped it even more. And then the net income turned positive. So it got the triple dragon. Obviously, operational cash flow was also positive, which is why this is still beta. It needs to say operational cash flow. So we're still building this. We're still building out the software, right? This will be long range. So for people that want to see patterns and study patterns, because I am an academic by heart, all right? So you could see that by 2000, Humana turned positive, and Humana finally got their triple dragon. So by 2000, it turned positive. The stock price was around $4, and then it went from $4 to 12, 14, 16, 15. So pretty much was able to go up, 300%, right? But then you got that, .com crash, and then all of a sudden it started rising, right? It started rising. And also, these were the trailblazers. No one knew how profitable these companies would get. But ultimately, you could see net income. Ultimately, it kind of was never as profitable as United. But you can see, the net income here was negative. And if you look at free cash flow, you can see how it just started to go up. Look at the free cash flow. I mean, look. That's why we estimate. Here's a negative 28 million, negative 95 million. That's why the stock dropped. They were negative free cash flow. But just look at the free cash flow over time. 720 million, 1 billion, 2 billion, right? 3 billion, right? So you could see how this works and ultimately look at the revenue, right? So you could just kind of graph the revenue here. So we're going to be coding this and we're going to be programming this. And this is why, the lifetime access is expensive, because it includes software. When have you ever seen software that's included in lifetime access? I'm not doing this for money. All the money that comes into lifetime gets invested into, in fact, I'm losing money, right? This is expensive, right? All the money that gets into lifetime gets reinvested back into the business, because I'm trying to create something that the rich have. And you can see how powerful this is. So we're going to be coding this, making sure everything's good, everything's sexy, and we're just going to make it just damn freaking sexy. We're going to really put some power into this. Okay. Let's see here. These videos are such a blessing. Thank you for a constructive lunch break. I appreciate you, 3D Machines. Appreciate you a lot. Love you guys. Right. So now that we went ahead and talked about kind of I showed you the software and showed you kind of where Clover is and relative to United. Most people, you really think retail investors are going to look in the 80s? You really think, come on, you really think they're going to look in the 90s? People don't even remember what they ate last week. I don't even remember what I ate last week. I got to think about it, right? I ate In-N-Out yesterday. That was really good. I got a lettuce wrap. For all my East Coasters that don't know what In-N-Out is, you guys don't know what a real burger tastes like, right? No, In-N-Out's really good. It's like hand cut fries, and it's one of those good American companies. I'm gonna just put on this here so we can listen to the Clover Health counterpart. This is the software, right? Let's see. East Coast is White Castle. White Castle's really good. What's it called? Harold and Kumar. Yeah. Man, that was the movie, man. I had to find me a White Castle after that. I got the microwavable ones, but they finally came to the West Coast. So, and then I actually ate one, and I'm like, I don't know. It's okay. I think In-N-Out's better. There's one in Vegas, too. And In-N-Out coming to Tennessee. I saw one being built. Oh, you're going to enjoy it. They got the little palm trees like this, right? Yeah. I would say In-N-Out is way better than that, right? I've been westward, In-N-Out don't have nothing on. Oh, we have Culver's. Culver's is good too. Some of us lived through those times, right? Oh, so you know. Let's see, where are we here, Mr. Kevin? Oh yeah, B-Rob, thank you for posting. Sometimes they didn't have the link, so we had to kind of help Clover out. It's okay, Clover, we love you. Let's see here. All right, so let me go here, and then how do we do this? So I've never played from Apple here, so let me see if this works. Let me remove this, and let me is it Chrome tab? Yeah, we're going to go and play this. We'll see if it works.
I couldn't. They're going to want to leave.
Bring you with action sparing provider group. We hope.
Let me think.
Primarily on the East Coast start.
Get started by having you tell us, and you love to.
Wow, her voice is just perfect. Like her voice is like if an angel sounds like that, it'll be her voice. Such a podcast voice.
A 5-year-old and a 3-year-old, and they are
For help.
All right, here it is, guys. So now that we're here, let me know if you guys hear this. Let me turn on the volume here. Let me know if you guys hear this.
What's the business problem that you all are trying to solve?
We're a publicly traded healthcare company. Our mission is to improve every life. And that really is where a lot of the work.
So yeah, they say they improve every life. I mean, maybe Clover can be used for Medicaid and other things. I don't know. Let's go and take a listen to this, and then let's learn. And then please let me know if you guys can hear this.
For us starts. Clover is most well known and synonymous really with our core product offering, which is a Medicare Advantage product. We have 100,000 members in that Medicare Advantage product. That's primarily on the East Coast, heavily in our kind of fortress market we talk about as New Jersey. But we also have membership in Georgia, South Carolina, Texas, Pennsylvania.
Stop. Everyone, shut up and watch. Holy freaking crap. Are you ready? Buddy, calm down. It's not United. Calm down. All right, holy crap. Holy freaking crap. Are you seeing this? Oh my God. Everyone's going crazy. The dogs are going crazy. Holy crap. Are you okay, guys? Are you watching this? What does this say? I did not update this. This is a Fintel page that I opened up 30 minutes ago. I opened up this page 30 minutes ago, 40 minutes ago. Okay? Do you see this? It says 98 million. What I'm going to do now is I'm going to copy this link, and I'm going to open up a new Fintel page. Okay? I'm going to open up a new Fintel page. Holy shit. It said my browser lost connection. We are up 100 million shares. We went from 23.88% to 24.19% while we are live. While we are live, we went up. As retail sells, institutions are buying your stock. I've been trying to warn you. I've been trying to tell you. Guys, let me show you. I didn't even refresh this. I didn't refresh this. We were at 98.8 million shares of institutions at 23.88%. Yesterday, we were at 22%. The day before, we were at 21%. I just refreshed the page. Let me refresh this now. I'm going to refresh this, and we'll never see this 23% anymore. It's gone. I'm going to refresh this. I'm going to refresh this. Now it says 24.19%. You're right, B-Rob. I need to take a deep breath. I need to calm down. I need to calm down. I need to put this on. I need to put this on, guys. I need to put this on. Calm down. Calm down. Right? Jesus. Oh, my God. Are you seeing this? Are you seeing this? Institutional ownership is rising, and we called it out on our software. We told you it broke trend line, and I can show you, right? Let me open up the software. You go to the Al Stock Trade software, and we go to Quantum Chart Terminal. We go to Clover, institutional ownership, and ours is slowly getting updated too. Look at this. Look at investor. Ours give you more data. Look at investor holdings. It's shot. Again, this is the simple moving average, the red line, and this is stage analysis. Okay, we got more holders than ever, more than we did in 2020. Number of shares now has broken trend line. Total invested has broken trend line. Ownership percent has broken trend line. New positions has surged. Increased positions has surged. Closed positions have dropped under trend line, meaning less people are leaving. There are more calls than there are puts. I mean, holy moly. Wow. So I just refreshed it. Wow. What's the most recent updated positions? Let's see. See how their graph doesn't really gives you 5. Their graph only gives you 5 years. Our graph gives you 20, 30 years of institutional data. I'm telling you, if you look at Palantir's data, I'm telling you, we can do an institutional ownership. Let's just do that real quick. Let me just show you. Okay. Let's exit. Let's look at Enphase. Let's look at institutional ownership. Let's score it. Right. Institutional investors looks like it's being updated now. It looks like they're selling, but it's being updated. So just calm down. Our systems is updating it. So just remove this, forget this drop right now. But I want you to look at ownership percent. Look at this. You see, this is being updated right now. That's why it's showing 0. It's being updated as we speak. But look, you see this here? You see how in 2017 it crossed up? In 2017 it went up, right? And then after that it literally went from 19% ownership all the way up to over 80%. Ladies and gentlemen, if we were to go ahead and take a look at Clover, no. If we go ahead and take a look at this, and let me see, where are we at? And look at ownership. Guys, we just broke out, and we were at, a few months ago, we were at 18.9%. Let's see what's going to happen in terms of percent now once this updates. This is a big deal. This is a very, very big deal. Now, let's see what the new folks are buying. You can also look that up in the stock terminal. We'll be including that, so you don't have to get a Fintel membership, right? So let's do that. Let's figure that out. We're trying to put as much value as we can. So we got this person buying, and this is just this is insane. Look at that. There it is. So excellent work. 25% end of day today is deadline. No, pretty awesome. We are watching history in the making as a healthcare industry is being literally the healthcare industry is being disrupted, and we're watching institutional ownership in real time go up. I mean, are you watching this? And you know what the sad part is? There's people out there that don't believe us, and they're ultimately going to end up coming back when Clover goes to the moon. It is what it is. I've seen this play out a lot. Okay. Don't worry, we'll be able to sell them our shares later through cover calls and cash secured puts, but we need to remember to put God first. Okay. Looks like because Bank of America bought 979,000 shares in Q1. Dude, Bank of America, we just had that event, and they're realizing that, oh my God, this is a big company. And I believe now they're going to end up being on their earnings call, and they're going to start setting price targets. Once they're done eating all of retail shares, the weekends they sell, then they're going to start setting price targets. Again, I've seen this. I've been in Wall Street for over 14 years. I've seen this play out. It's Netflix slaying Blockbuster in real time, literally. In stuff happening. I am off meetings. B-Rad, you got to catch up, dude. This video, yeah, holy moly, in real time. Michael Jackson, Bank of America. Well, they tried to hurt us, right? Oh, where's Lisa Gill? Lisa, where are you? Right? Hope they lend out shorts. Ate that. Oh. All right. So now let's go back to counterpart interview. I just want to give a shout out to Benjamin Walker. Thank you, Benjamin. I appreciate you for letting me know. I stopped the whole live for that. Thank you, Benjamin. Thank you. Okay, let's see. Let me know if you guys hear this. Let's resume. Listen, guys, Oscar Health is not a competitor of Clover Health. They're in two different markets, but they're both using technology. There's no audio. There's no audio. No sound. What? Hmm. Hold on. Hold on. Let me fix this. I'm sorry, guys. Shoot. Hold on. Wow. Okay. How about this?
Your insurance plan. We did it differently. We focused instead on building.
Okay. Okay, that's good. So that's working. Okay, so let me just stop sharing. And good. So then now let me just um let me let me see. One moment. Okay. So let me know if you guys hear this.
Kids that I love right now, a 5-year-old and a 3-year-old, and they are awesome. And it has really changed and helped me think about how to be the best leader I can be. And
Do you guys hear that? Do you guys hear that? Okay, good. So in the next couple of minutes, he's going to talk about. Let me see. And you guys, hopefully, you guys hear my mic. In the next couple of minutes, he's going to basically talk about how he admires Oscar. I believe Oscar is not a competitor. They're not in the same market. I don't think Oscar even does Medicare Advantage, if not just a little bit. So this is good. Okay. So let's listen and let's learn.
how to be the best parent, and has really figured out the intersection of work and life.
And you love to ski.
We're a big ski family. We're actually up school vacation for our kids this week, and they're out skiing, and I'm here recording a podcast with you and working, but they're out on the mountain ripping it up, which is fun.
Kevin, we'll get started by having you tell us a little bit about Clover Health. So, what is Clover Health? What's the business problem that you all are trying to solve?
We're a publicly traded healthcare company. Our mission is to improve every life. And that really is where a lot of the work for us starts. Clover is most well known and synonymous really with our core product offering, which is a Medicare Advantage product. We have 100,000 members in that Medicare Advantage product. That's primarily on the East Coast, heavily in our kind of fortress market we talk about as New Jersey. But we also have membership in Georgia, South Carolina, Texas, Pennsylvania, a couple other states and counties. And what we strive to do is provide the best care possible to our members. A little bit different than other insurance companies, we operate as a PPO plan. So about 95% of our membership is in our PPO plan. We do have an HMO, it's about 5% of our membership. And for those a little bit less familiar with the nuances between those two, a PPO, what it really means is that we have what's called an open network. Members have a lot of flexibility in who they can see as their doctors. The in-network and out-of-network rates are slightly different, but it's not like an HMO where there's no coverage for out-of-network. There is coverage for out-of-network care. So that means for us that our members get to go and see whichever doctors they want to go see. They can get the care that they want to go see. And that's pretty different in the Medicare Advantage market. And what we've been able to do as a company over the last really 12 years, the company was founded by Vivek Garipalli, wonderful founder, and he's still our chairman and awesome visionary leader, was to set out and do things differently. And that started for us by really investing heavily to build a technology product and build a differentiated approach to how Medicare works. There's a couple of models out there like that. I really respect what Oscar Health is doing. They're a great example of another technology-focused healthcare company. They've focused on the technology component internally to healthcare operations for them of their operating model and how they operate their insurance plan. We did it differently. We focused instead on building technology for essentially the physicians in our network and those that are accessing and caring for our members. And that technology investment is how we've been able to really focus and drive what I think is pretty impressive and exciting performance as a company. We're publicly traded, so you could see all of our results. 3 years ago, we lost $300 million. And in 2024, we're going to have positive adjusted EBITDA performance. Final results are coming in the next week or so, but we've had positive guidance all year. Our medical cost ratio.
He means 2025, ladies and gentlemen. He means 2025. In 2024 they lost 43 million. In 2022 they lost around 300 million. And how do we know that? Well, because he just said it. But also, ladies and gentlemen, also we went ahead and talked about it yesterday. Remember the iPad discussion? If you haven't watched that video, I put a lot of videos out these past couple of weeks. The past week, there's been a lot of videos. It's been long, but I'm telling you, each video has a piece. Each video has knowledge, and I've been putting a lot of my nuggets and knowledge in these videos, so they've been very good. Okay, and you can see, they all know where they're going. I'm telling you, they all know where they are going. Okay. Let's go ahead and go back to the podcast.
Ratio is sub 80%. We have the industry leading HEDIS performance in the country for any plan with 2,000 members or more. Again, for those less familiar, HEDIS is the way that CMS and the government measures quality of preventative care. And so we're really proud of those types of results in a way that is different. And it's all foundationally built around our approach to serving our members through enabling physicians with our software and technology.
Feel free to tell us from either the patient or member experience or the physician experience. If I'm with Clover Health, how is that different with the technology that you all have built?
This is not completely invisible. I think, we do a little bit to market and have some awareness of what our core technology product, we call this the Clover Assistant. They have some awareness of what that is, but the way that really influences the membership is that the physicians that use our technology, so we have a lot of our in-network primary care physicians that use the technology. We also, as Clover, we actually operate 3 business lines. So we have our Medicare Advantage line. We actually run one of the largest in-home care practices in the state of New Jersey. So we have our own clinical action arm. We call that Clover Care Services. They're an incredible team of doctors and nurse practitioners that are going out in the home of our membership and providing care at the point of care there. And then we run our technology business. And so,
ladies and gentlemen, it's very important to understand that Clover Health's value home care based system is killer. It's going to be a big business model, ladies and gentlemen. That's such an undervalued market. Okay. In the future videos, I will explain why. But let's, at the purposes and respects of this podcast, let's continue.
The way that our membership experiences the differences is, one, we have this wonderful in-home care program. It has amazing NPS scores, and members love the experience of having really a caring member of our clinical team in their home doing a holistic patient evaluation, truly trying to understand what's going on with that member and provide the best care possible. Those physicians, as well as our in-network PCPs, are then empowered with our technology product, Clover Assistant. And what we've been able to show is Clover Assistant really can help in a number of ways improve the patient outcomes. We've published a couple of white papers around how we can identify diabetes. Actually, in diabetes, we identify diabetes 3 years earlier on average, which means that a member is getting diagnosed with diabetes when their hemoglobin A1C is at 6.6 on average, compared to providers who don't have access to our technology. They're getting diagnosed on average at 6.9. That's a 3-year differential in timeline for most members. And then what's really important about getting diagnosed early is then treatment starts early. So we can then see in our data as well that members who get diagnosed with diabetes, they immediately see a spike in oral diabetic medications being prescribed.
I'm going to pause this because this guy's not a doctor. I'm a medical student. I'm a future doctor. Let me explain to you why that is important, okay? And I don't know if he's going to go into it, but let me explain, okay? Somebody gets diabetes. What is that? A lot of sugar in the blood, okay? Lots of sugar in the blood. It starts to disrupt things, okay? It starts to attack little small vessels where the sugar glycosylates, and it causes little itty bitty vessels in the feet to not perfuse the area. So you get damage to the nerve endings, which you'll get something called peripheral neuropathy, okay, to where you cannot feel sensation in a stalking and distributing pattern, where you cannot feel in your both of your hands, or you cannot feel in the bottom of your legs. And because you get peripheral neuropathy, it is very painful. It is pain. And unfortunately, a lot of people come to the clinic, even to neurosurgery clinic, and they said, I have pain. I don't know what to do. And the surgeon has to parcelate between if this is surgery or non-surgical. And unfortunately, it's non-surgical. I had one of my professors, a professor in medicine, come to the clinic, not neurosurgery, but another clinic. And I'm not going to name who, of course, but even one of my beloved professors, I love you so much. If you're watching, I love you. You taught me everything I know. He was having pain. The problem is, guys, what ends up happening is that sugar also goes to the kidneys, right? And there are two arteries that come in and out of the kidney. It's a special organ. Usually it's an artery and a vein, but the kidneys are weird, right? They got you got the afferent artery and the efferent artery. What ends up happening is these artery systems starts to glycosylate, and it essentially starts to put sugar deposits in a way on the exiting artery. Let me explain to you. Let's say I have a straw. And I go in and I pinch this side, but let's say I pinch this side and I put water in here. Water is still flowing. What's going to happen here? It's going to balloon outwards, right? Right. And that's what's happening. You get hyperfiltration, and then the kidneys get overworked, right? Because they're getting attacked by the glucose. And ultimately, you end up getting kidney disease, and you get renal failure, and you get dialysis. But hey, guess what? Clover Health and Counterpart Assistant is also is able to help you with CKD. But you see how the kidneys and the diabetes are related, right? But guess what? You also have heart failure related as well, because you can get something called cardiorenal syndrome, right? The heart, because it starts to fail, it cannot perfuse to the kidneys, so the kidneys start to fail. But then there's different types of cardiorenal syndrome. You have type 1, type 2, type 3, type 4, and type 5, right? And that the argument is, well, which one went down first? Was it the kidneys or was it the heart, right? Or was it both? Or was it an acute on chronic, right? So you see how medicine's complicated, right? And I don't want to take it to that complexity, but as someone like what Peter Lynch was saying, the fact that they're able to diagnose it from a 3-year perspective, that is huge. You know how much life expectancy that increases, right? It saves the system a lot of money. Okay. Now I can already see a future news article that says Clover Health is making their patients live longer. So because patients are living longer, they're taking more from Medicare and Medicaid. I'm joking, right? But this is such a big deal, right? And this is why I'm so passionate about this company, from a Wall Street side, but also from a medical side. Okay. That's why a lot of doctors are excited as well. And, I just wanted to add that in there. So give you that medical perspective. I just gave you a quick lecture in medical school to kind of supplement your education and to supplement your learning. Okay. Hopefully that helped. Let's go back to the podcast.
That then helps slow down the advancement and progression of diabetes. So less than 50% of the members who get diagnosed with diabetes end up progressing to insulin, and less than 50% of the members end up having hypoglycemic events. And that's true across a range of chronic conditions. We published another white paper on CKD. We diagnosed CKD a year and a half earlier on average. And again, we're identifying that earlier, the eGFR, which is the clinical way to measure the kidney function there, that ends up attenuating the decline in the kidney, meaning members are living healthier lives longer. That then ultimately translates to managing the total cost of care of that membership earlier. We're treating those conditions earlier. They're seeing fewer downstream consequences of those chronic conditions. And ultimately that then leads to our leadership on the HEDIS side and our quality side. Because we're identifying these conditions earlier, because we're treating them earlier, we're also starting and working around preventative medicine earlier. So we're trying to identify those conditions, and that then
big deal. They're identifying conditions earlier. Again, I'm sorry for the disruption, guys. I want to go ahead and I want to stop this, and I want to share with you the screen yet again. I'm really sorry. As you can see here, guys, remember how I told you Clover was at institutional ownership of 24.19%? Guys, we did it again. I'm going to refresh the page. I want you to remember the number 2419. In fact, I'm going to copy it and put it in the chat. Okay. I'm going to copy it. I'm going to put it in the chat, guys. We were at 24.19%. I'm going to update it. Are you ready? Who wants to see where it went up to? Let's see when institutional or investors increased. Now, I just hit it. Oh, 24. Wait, what? Let me try it again. Wait. I gotta let me just I have to redo it here. That's weird. Mine's not updating. That's fine. Let me just show you this one. You see how it went up to 24.35%? It went up, right? I don't know what's going on right now. I think it's changing. I probably should do a hard refresh. Or maybe it's just going up and down and they're updating it in real time. Let's see. No, 24.35. So I just needed to do a hard refresh. Right? So you can see we were at 24.19. Now we're at 24.35. So we keep going up as, maybe I should just continue keep doing the live and see how far we go. You know that song? You gotta pump it up, don't you know? Right? So think about it, guys. That's why a lot of people that don't know Wall Street that are on that you got 19-year-olds with 50,000 followers that don't know Wall Street, and people are basically following them blindly. That's why I built the YouTube channel. That's why I built the stock terminal here to show you. I've been, I'm trying to show you what these Wall Street people are doing. And there's just a lot of bullshit out there. And what you're starting to see now is you're starting to see what I've been saying is slowly coming true. You're starting to see it. Okay. And again, no, this is not magic. This is math. And I've democratized this math. And anyone can get access to this math by joining our lifetime access. Okay. So that's a huge increase. Let's go ahead and let's stop the sharing of the screen. And let's go ahead and this time go back to sharing this one here. And let's go back to our podcast.
Translates into those HEDIS scores. We in star year 25, which is the most recent stars years from CMS.
Let me know if you guys can still hear this.
Our HEDIS score was 4.94 for our PPO plan, which is close to a perfect score is 5 stars. Close to that, like essentially all of the different measures of HEDIS, we've been able to show that our membership is really performant and our membership is really getting wonderful early preventative care, which all of the credit for all of these things ultimately lies with those physicians. And what we've focused on is really how do we build technology to give them the tools, the data, the insights that they need in intuitive clinical ways to help them care for our membership. And that's worked really, really well over the last couple of years.
Kevin, that's incredible. I think that you all have really figured this out because it's not an easy thing to do. With the HEDIS and STARS, some of them, it's, you don't really have a window of opportunity or they can span a long time horizon. And so I think a lot of organizations try to do this well and they try to implement the model as it was intended to have more preventive care, to find, chronic conditions and diagnose it earlier, to get people on the right medications. And it's challenging for a lot of organizations. And so what have you found that you've done that's different from what other people are doing? Like, what's the secret?
I think our secret lies in a couple of things. The first is so often the healthcare ecosystem is fragmented, specifically from a data perspective. So we focused a lot on investing on interoperability, bringing different data sets together, unifying those data sets. So we do a lot. We're pretty active in making sure we go out and get all of the data possible to help a physician. So if doctors are telling us, hey, I need clinical charts, what are we going to do to go help them get the charts? If they say, I need lab results, how do we go and make sure we get the lab results that they need? And there are little things in the healthcare system that make that really complicated. If your cardiologist orders a lab result, unless they remember to put your PCP's name on there, the result never goes back to the PCP. So that just becomes a gap in the PCP's ability to manage those chronic conditions. So one is we've gone out and we've really worked to make sure we're doing all we can. And ecosystem is fragmented, specifically from a data perspective. So we focused a lot on investing on interoperability, bringing different data sets together, unifying those data sets. So we do a lot. We're pretty active in making sure we go out and get all of the data possible to help a physician. So if doctors are telling us, hey, I need clinical charts, what are we going to do to go help them get the charts? If they say, I need lab results, how do we go and make sure we get the lab results that they need? And there are little things in the healthcare system that make that really complicated. If your cardiologist orders a lab result, unless they remember to put your PCP's name on there, the result never goes back to the PCP. So that just becomes a gap in the PCP's ability to manage those chronic conditions. So one is we've gone out and we've really worked to make sure we're doing all we can to have the right data that allows physicians to do their job effectively. And then the second thing that we focused on is we run all that data through. So we've built a pretty large, interconnected, interoperable healthcare platform. We then bring all that data in, we deduplicate it, we normalize that data. On our side, we follow industry standards and best practices. We have a FHIR R4 normalized clinical data model that then runs through hundreds and hundreds of machine learning models. We have patents and true intellectual property around things like we have a model for diagnosis suspecting, we have a model for medication non-adherence. Those are patented models that we have. Because what we're trying to then do is that key thing, pull those insights out and then give them to doctors in clinically intuitive ways. The goal from a clinical perspective is evaluating for the type of diabetes, the associated conditions, the clinical answers, and then the treatment of that diabetes. I think a lot of healthcare, we fall a little bit short. We say, oh, doctor, here's an ICD-10. What do you want to do with that? The doctor's like, ICD-10s are not conditions. ICD-10's coding. It's not relevant to clinical care. So get rid of that. We don't focus on those things. We focus on how do we actually think about there's a human in the room that you're seeing. You need clinical data to treat that human. Let's give you the right clinical data at the point of care. And that's key, is if you have that data at the point of care and our doctors are using our technology at the point of care. It's an EHR sidecar, so we integrate deeply with lots of EHRs. We also have a web application for doctors that are on paper charts or even the long tail of EHRs that we just can't reach. And they all get access to this technology. Some of my favorite quotes is we have a partnership with Duke Connected Care, a leading academic medical center down in North Carolina. Their community physicians and others are using our technology under Counterpart. And one of the doctors gave the quote, and we love this, of he was just so thankful to finally get the data for his membership. He works in a rural clinic. He's not on.
So what you're starting to see, and I think B-Rob is talking like this. So B-Rob, yes, you're correct. We give the physician at the point of care, at the point of care. How many times have you seen Andrew Toy say at the point of care? They're all speaking in unison. When you talk to him, it's like you're talking to Andrew. That's how you know Andrew's a good CEO, right? A good CEO knows another good CEO, right? I've studied countless and I've read hundreds of leadership books, right? I can smell when someone's a good leader. I thought the same. Exactly. What you all are gaining right now and what you all are learning, and soon this will be a course section in Lifetime Access, is how to assess management and determine if they are all speaking in unison. Let's continue.
Epic. He's not on one of these larger EHRs where sometimes you can get a pretty good view of that, but truly in a web application, not an EHR integrated version. And he's just over the moon excited to finally have access to provide the care that he can. He's a phenomenal doctor. He just didn't have the tools to get what he needs to support his members who are showing up with a bag of meds and a discharge and trying to coordinate the care, and they can't remember who they last saw. We put the onus in the wrong place in healthcare. Members shouldn't be the stewards of their healthcare data. Instead, we need to build a system that allows that. And then physicians should be empowered with the right data to then make the right clinical decisions. We don't need to make decisions. We identified cancer for you. There are great companies doing that. We just say, hey, here's the right data. Can you evaluate with this and let us know what's going on so that we could support the member?
Kevin, you mentioned Counterpart, which I think is a great segue. And then you also earlier mentioned Clover Assistant. You're the VP of product at Counterpart Health, not Clover Health anymore. So let's talk about that. What is Counterpart Health? And, tell us about kind of the mission, go to market. We'll actually first explain the relationship, and we could talk about that. We'll segue to the others.
Awesome. Yeah. So Counterpart Health is the third business unit of Clover Health. So Clover Health is the parent company. We have the Medicare Advantage line, we have our clinical practice, and then we have a technology business. We have built a wholly owned subsidiary, so it's a separate legal entity called Counterpart Health. And we did that a bit. I like cars, so I always use the analogy. Ford has the Lincoln brand. We're the Lincoln brand of Clover, because when I say Clover in the market, everyone says, oh, so you're an insurance company. Counterpart Health is not an insurance company. Counterpart Health is a value-based care technology enablement platform. So we work with risk-bearing provider groups, we work with other payers, we work with other technology companies. We're truly trying to provide that technology that has been incubated and built within the Clover entity for the last 7 years. We're taking that technology, we've now put it into a legal entity so that when we go out to market, other people know what that is, and that we can then help other physicians and other members. Our mission at Clover Health is to improve every life. The way to get there is we know we have to support members who aren't part of the Clover plan. I'll admit I'm biased. I do think our Clover plan is wonderful and members who are eligible should consider that as a plan. But also I want to support everyone, right? I think what we're doing in our technology can be useful in a lot of context. I think a lot of physicians can benefit. And we've seen that play out now. So we've announced publicly 3 customers already. So that's Duke Connected Care, as I mentioned earlier. We have in the Midwest, the Iowa Clinic is a leading multi-specialty group, and we're very excited to partner with them. And then we have another partnership with Southern Illinois Health, and they're a wonderful group, and they also have a large rural population that they support. And it really speaks to the range of different organizations that can access and use the technology. Clearly, we have our Medicare Advantage plan that uses it. Clearly, we have an in-home care practice that uses the technology. And we're continuing to see a lot of things I can't announce on this call about the momentum we're seeing there, but those things will continue to be announced publicly as we're able to.
Kevin, I think that business model is really compelling because, if I'm sitting in the shoes of a lot of these entities that are trying to manage their patients better and knowing that their risk adjustment changes, there's more focus on HEDIS and better care. And so the opportunity for you all is incredible. How do you think about the go-to-market and how do you segment the market?
It's a really exciting time for that because, as you said, Angela, we're uniquely positioned as Counterpart that I can go back and show longitudinal, actuarially, and actually publicly available results from our product. If someone wants to know how well we're doing as a product, I can literally point you to our SEC filings of Clover going from above 100% MCR to less than 80%, our HEDIS scores. So that's actually really helped us and enabled us in our go-to-market motion. And what we've focused on then is, to your point, where are the different places that we think those types of results will most impact patient populations and businesses? And there are a couple ways that we see that. The first is there are other payers that could benefit from the technology that we've built and deployed. And so we're talking to and have a number of conversations and work there that's with other payers and how we would offer that. The second is in healthcare.
Ding, 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 ding. Ding, 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 ding. Ding, 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 ding. Zoom in on me. Zoom on me. Ding, 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 ding. Ding, 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 ding. What did he say? What did he say? What did he say? Zoom out. What did he say? Were you expecting that? Ding, 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 ding. What did he say? They're having conversations with other players, other payers, right? Who? Humana, UnitedHealthcare, Molina, Molina. Da-na-na-na-na-na. Who is it? Who is it? Let me replay that. Let's listen to that.
It's, you don't really have a window of opportunity, or they can span a long time horizon. And so I think a lot of organizations try to do this well, and they try to implement the model as it was intended to have more preventive care, to find, chronic conditions and diagnose it earlier, to get people on the right medications. And it's challenging for a lot of organizations. And so what have you found that you've done that's different from what other people are doing? Like, what's the secret?
I think our secret lies in a couple of things. The first is, so often the healthcare ecosystem is fragmented, specifically from a data perspective. So we focused a lot on investing on interoperability, bringing different data sets together, unifying those data sets. So we do a lot. We're pretty active in making sure we go out and get all of the data possible to help a physician. So if doctors are telling us, hey, I need clinical charts, what are we going to do to go help them get the charts? If they say, I need lab results, how do we go and make sure we get the lab results that they need? And there are little things in the healthcare system that make that really complicated. If your cardiologist orders a lab result, unless they remember to put your PCP's name on there, the result never goes back to the PCP. So that just becomes a gap in the PCP's ability to manage those chronic conditions. So one is we've gone out and we've really worked to make sure we're doing all we can to have the right data that allows physicians to do their job effectively. And then the second thing that we focused on is we run all that data through. So we built a pretty large, interconnected, interoperable healthcare platform. We then bring all that data in, we deduplicate it, we normalize that
I'm going to play it faster so we can get to that. Ding, ding, ding.
data on our side. We follow industry standards and best practices. We have a FHIR R4 normalized clinical data model that then runs through hundreds and hundreds of machine learning models. We have patents and true intellectual property around things like we have a model for diagnosis suspecting, we have a model for medication non-adherence. Those are patented models that we have. Because what we're trying to then do is that key thing, pull those insights out and then give them to doctors in clinically intuitive ways. The goal from a clinical perspective is evaluating for the type of diabetes, the associated conditions, the clinical answers, and then the treatment of that diabetes. I think a lot of healthcare, we fall a little bit short. We say, oh, doctor, here's an ICD-10. What do you want to do with that? Doctor, ICD-10s are not conditions. ICD-10's coding. It's not do connected care leading active support his members who are showing up with a bag of meds, and it can get a pretty good view of that. So he was just so thankful to finally get the data for his membership. He works in a rural clinic. He's not on Epic. He's not on one of these larger EHRs where sometimes you can get a pretty good view of that. But truly in a web application, not an EHR integrated version. And he's just over the moon excited to finally have access to provide the care that he can. He's a phenomenal doctor. He just didn't have the tools to get what he needs to support his members who are showing up with a bag of meds and a discharge and trying to coordinate the care, and they can't remember who they last saw. We put the onus in the wrong place in healthcare. Members shouldn't be the stewards of their healthcare data. Instead, we need to build a system that allows that, and then physicians should be empowered with the right data to then make the right clinical decisions. We don't need to make decisions. We identify cancer for you. There are great companies doing that. We just say, hey, here's the right data. Can you evaluate with this and let us know what's going on so we can support the member?
Kevin, you mentioned Counterpart, which I think is a great segue. And then you also earlier mentioned Clover Assistant. You're the VP of product at Counterpart Health, not Clover Health anymore. So let's talk about that. What is Counterpart Health? And tell us about kind of the mission, go to market. We'll actually first explain the relationship, and we can talk about that. We'll segue to the others.
Awesome. Yeah. So Counterpart Health is the third business unit of Clover Health. So Clover Health is the parent company. We have the Medicare Advantage line, we have our clinical practice, and then we have a technology business. We have built a wholly owned subsidiary, so it's a separate legal entity called Counterpart Health. And we did that a bit. I like cars, so I always use the analogy. Ford has the Lincoln brand. We're the Lincoln brand of Clover, because when I say Clover in the market, everyone says, oh, so you're an insurance company. Counterpart Health is not an insurance company. Counterpart Health is a value-based care technology enablement platform. So we work with risk-bearing provider groups, we work with other payers, we work with other technology companies. We're truly trying to provide that technology that has been incubated and built within the Clover entity for the last 7 years. We're taking that technology, we've now put it into a legal entity so that when we go out to market, other people know what that is, and that we can then help other physicians and other members. Our mission at Clover Health is to improve every life. The way to get there is we know we have to support members who aren't part of the Clover plan. I'll admit I'm biased. I do think our Clover plan is wonderful and members who are eligible should consider that as a plan. But also I want to support everyone, right? I think what we're doing in our technology can be useful in a lot of context. I think a lot of physicians can benefit. And we've seen that play out now. So we've announced publicly 3 customers already. So that's Do Connected Care, as I mentioned earlier. We have in the Midwest, the Iowa Clinic is a leading multi-specialty group, and we're very excited to partner with them. And then we have another partnership with Southern Illinois Health, and they're a wonderful group, and they also have a large rural population that they support. And it really speaks to the range of different organizations that can access and use the technology. Clearly we have a Medicare Advantage plan that uses it. Clearly we have an in-home care practice that uses the technology. And we're continuing to see a lot of things I can't announce on this call about the momentum we're seeing there, but those things will continue to be announced publicly as we're able to.
Kevin, I think that business model is really compelling because, if I'm sitting in the shoes of a lot of these entities that are trying to manage their patients better and knowing that their risk adjustment changes, there's more focus on HEDIS and better care. And so the opportunity for you all is incredible. How do you think about the go-to-market and how do you segment the market?
It's a really exciting time for that because, as you said, Angela, we're uniquely positioned as Counterpart that I can go back and show longitudinal, actuarially, and actually publicly available results from our product. If someone wants to know how well we're doing as a product, I can literally point you to our SEC filings of Clover going from above 100% MCR to less than 80%, our HEDIS scores. So that's actually really helped us and enabled us in our go-to-market motion. And what we've focused on then is, to your point, where are the different places that we think those types of results will most impact patient populations and businesses? And there are a couple ways that we see that. The first is there are other payers that could benefit from the technology that we've built and deployed. And so we're talking to and have a number of conversations and work there that's with other payers and how we would offer that. The second is in healthcare, increasingly providers.
What did he say? What did he say? What did he say? He said other payers. He said other payers. You understand what that means? He said other payers. Listen to what he said. Other payers. You understand that? Are you watching me? Other payers. Are you listening? Could be the old CEO of United, maybe. Could it be he said, man, we need help. We need help, Andrew. I need you, Andrew. I need you, right? Could it be? Let's carry on and listen.
Are essentially payers, right? If you're a provider group and you're fully capped, or you're in various value-based care arrangements with gain shares and other components, you're essentially taking on the total cost of care and responsibility of that membership. So a lot of provider groups are very interested in what our technology can help them achieve in those businesses. So we've seen a large number of risk-bearing provider groups that are interested in improving their performance in those risk arrangements, in those total cost of care arrangements, as well as improving their quality. Then the last group is there's a lot of physicians, and we actually see a lot of this in the Clover MA network, that are not highly sophisticated from a value-based care perspective necessarily. They're amazing physicians. They're caring for their membership. They have a couple of doctors in their practice. It's really hard for those groups to get to value-based care. There's a lot of investments you need to make. There's a lot of cost that goes with this. A lot of organizations are doing really impressive things there. I think highly of how many organizations are going about approaching that. But we have a model that we think works in that space as well. And so we're going and working with those smaller groups to help them get to value-based care outcomes as well. So we really think about it right now in those three areas. And I leave the right now there because we're early, right? We only launched Counterpart externally to third parties sometime last year. We've got a number of customers and a number of conversations that are continuing to evolve. So there's an interesting dynamic internally for us, is that we're a publicly traded healthcare company and Counterpart is very early. So there's a different dynamic there. I don't say it's entrepreneurship. I don't say it's a startup within a company, because I've been a founder. I know what that's like, and I promise it's not what we're doing. I love what we're doing, but anyone who says that hasn't really been at a company with 4 employees and no one knowing what the hell's going on. I've been there. This is different, but there's a lot of things about what we're doing on the Counterpart side that don't map cleanly to the way running a publicly held company works, right? I can't give you my 4-year roadmap. I just can't. Whereas on the Clover Medicare Advantage side, we actually have a better way to be able to think about what those long-term places look like. So we are willing and open and trying to figure out, as we're scaling up our go-to-market motion, what ultimately is the right place for product market fit. We have product market fit. We see that. But now in the go-to-market motion, there's a lot of ways in which we could fit into those ecosystems differently. And so we're working with a lot of different organizations. We're very open to being creative about how we can provide the technology, how we can partner with them in value-based care, how we can bring our expertise as a Medicare Advantage plan. And being a full risk entity, we can hold risk in Counterpart with groups. We're comfortable with that. But we can also work with groups that hold their own risk, and we're more of a SaaS and technology vendor, and we can support them there. So we have a lot of ways that works. Again, a differential benefit for us is we were incubated within a health plan. We know what these models look like. So we also have disproportionate resources to go out and try to do those things. Whereas I do think it's hard if you're a startup, if you're a startup and you've raised even $50 million, that's nowhere near enough to hold risk, right?
That's it. They're killing startups. That's pretty much what it is. They cannot hold risk. This is not a startup. They already have product market fit. They already have the product. They're going to be a SaaS company, which is why I'm telling you, one of our members here was saying, hey, I'm a small fish. I got 20,000 shares. But, I imagine being able to do the wheel strategy. I mean, imagine, let's say the price goes to $30 billion market cap, 60. Now that's about 1.2 million. You go ahead and do that. You can make around $39,000 to potentially, $80,000 to $100,000 a month, right? And that's the power. That's why, I built this company in software to be able, and it's really cheap. I mean, already getting access to $45 million worth of net worth that's going to be in the billions, and getting access to all these smart people that know stocks, getting access to our stock picks, definitely there's a reason why I'm saying SaaS is the coupon code. Take advantage of this, because this thing only comes in a dime and a dozen, right? I'm very excited of what we're creating. You're not a small fish. You're going to be making more than emergency medicine doctors. You're going to be making more than majority of doctors. Okay. You understand how powerful that is? All right. Let's go ahead and continue.
Right? I think Vivek was a visionary founder. We've raised more than $1 billion of capital, and until this year hadn't made money. It's hard to get to risk. It's hard to be that sophisticated and scaled. So our ability as an entity to be able to do that also allows us to be thoughtful and partner with organizations appropriately, so that we're not trying to force a small practice with 200 members that are eligible for value-based care programs to hold risk. That doesn't work. You need a larger aggregated risk pool that can make something like that effective. So that's been something as we think about our go-to-market. How do we support all those different groups? And we will meet our customers where they are so that we can really help them achieve the types of results we've seen in our own patient populations and within our customers now, how they can get that same benefit.
So Kevin, I think what you're saying is really interesting. So you have this health plan arm, and then you have Counterpart Health. How, when you're planning your roadmap, are there considerations to how, if you help other risk-based entities or other health plans improve, that it might be disruptive innovation for your health plan business? Because it hinders Clover's ability to attract new members, right?
We do have conversations around what cannibalization could look like ultimately within the Medicare Advantage side. Now, part of setting up our legal entity is putting in the appropriate firewalls. So for instance, the CEO of our Clover Medicare Advantage plan, Jamie Reynoso, she's wonderful. She's amazing. I love working with Jamie. There are some calls where I just can't talk to Jamie about certain things. So to some degree, yes, that's a consideration. That's something that Andrew Toy, our CEO, and Vivek, our chairman, we talk a lot about strategically. How do we organize this, that we do this effectively? Right now, the quick answer I'll give is we've got about 100,000 members in New Jersey.
That's exactly what they're saying, because the problem is if UnitedHealthcare uses Counterpart Assistant and Counterpart Assistant understands what United is seeing, then they can give it to Clover, and Clover will be able to cannibalize and destroy United and bite them like this. They'll bite them because they have the data, right? And data is everything, right? So they have to say, hey, this is a non-disclosure agreement. I can't talk to the CEO of Medicare Advantage because I'm with you. We're two different companies umbrellaed over one, right? And yeah. And imagine though, let's say they split. Obviously you can't because it's part of the Counterpart Assistant, right? But you're getting essentially two businesses in one. You see how undervalued this company is? Are you seeing this? Are you seeing this? It's huge. You feel me? Let's continue.
Georgia, South Carolina, a couple other markets. The Medicare Advantage market is in the millions and millions of members. There's a lot of places that we can go that don't run into that conflict. So for now, we're in the fortunate blue ocean strategy moment where we don't have to make that trade-off deeply. And so that's what we're doing. We're just trying to avoid that conflict right away. At some point, there are those considerations. And that is really where we come back. And I love working at Clover for this. We are rooted in the mission of Vivek from when he started the company to improve every life. At some point, whether we do that through Counterpart or Clover or anywhere, the whole company is aligned that that is our mission. So we'll work through those problems and we'll try to solve that. For now, fortunately, the market is big enough. We don't have to worry too much about that overlap.
Kevin, when we first met, it was a bit over a year ago, and we were talking about empowered teams. And I think it was timely because there was some content that came out on Lenny's podcast about feature factories. And then you told me a story about when you had first joined Clover. Can you set the stage for us? Can you tell us about when you joined Clover, what your role was, and then how was product being built and what was the culture around product?
So I joined Clover 6 years ago. I was hired as a senior product manager for this new product that we were trying out. It was this thing called Clover Assistant. We had a handful of doctors in New Jersey using it. And the goal was, hey, can we figure this thing out? Can we get to product market fit? Can we make this work? How do we go do that? Like many startups, it was founder-led, right? At that day, Vivek, Andrew, they were calling the shots. They were the ones with the idea. They were the vision. They were trying to set this up. As a senior product manager, my job when I came in, Vivek or Andrew wanted to try to do something. How do we make it happen? Right? That's a good way to operate a company when you're a startup. That's what you need to do. Now, we talk about that a lot in the product org and in the product world is that's a feature factory. I think there's a little bit of a negative connotation around that. In some places, I agree with that. That's a bad way to operate a product organization. If you're a large organization, you're spinning out features. Well, there's a time and a place. When I joined Clover, the time and the place was where we were. Hey, ship these features. We don't know if we have product market fit. We don't know what doctors like yet. We don't know what's going to impact our membership. So we tried a lot of things and we pushed them down. Vivek, Andrew would have ideas. They'd want to go try it. We'd ship those things. We'd go do what we're going to go do. And so that was when I joined how we operated as a product team. And I was, upstart PM at the time. I thought I had a lot of good ideas and ways to change the world and how we could do things. And that can be a little bit of tension. I think we run into that even today sometimes, that people say, hey, well, what about all of my ideas? How do I go do these things? And you feel like you're just, I think that's where the term comes, feature factory. Well, it's like, no, my job is to move this widget along from a product development perspective. That's good. there's a natural time and place. And so I'm fortunate at Clover and now Counterpart, we have evolved because we've met that product market fit. Andrew, especially as a technologist, he former founder himself, his previous company Divide was acquired by Google. He understands product, he understands technology, knew, hey, we've got to evolve from this feature factory out. And so I was fortunate that as I was working with Andrew, saying, hey, can we work in a different way? Can we try to move away from a feature factory? Not to be mean, Andrew and Vivek, but they needed to start focusing on other things. Product was starting to work. Clover Assistant was working. We were growing. I didn't need the only ideas to come from them. And so we worked on resetting the expectation where Andrew and Vivek set the roadmap of what are the things we want to solve for? What are the outcomes? And they said, okay, go solve this outcome. And what we started doing was slowly and specifically, not the whole org, not overnight, we stopped working one way and started working the other. We said, okay, here's one problem. Let us start testing this other way to operate. And we started testing that other way to operate on that problem. And pretty quickly what happened is we'd show up to that weekly meeting, and we'd have results from the last test, and we'd have new ideas. And what we kept showing up now is like after 2 or 3 or 4 meetings, Andrew and Vivek didn't have the next 12 ideas, and we had the next couple ideas. And the results that we were starting to show were from the ideas that we were shipping because we were a little bit closer to the problem and started getting more of the insights because Andrew and Vivek were spending 30 minutes once a week doing product with us. And then they're spending the rest of their week being executive leading company. And so what happened is that team started building more of the context and knowledge and started to be able to get to that, what is now what we call an empowered product organization. They were really operating against an outcome. It wasn't ship features, it was move this business outcome. And that team started to get to those outcomes. And what we've been able to do now over the last couple of years is the entire product organization has scaled up a lot. Our technology organization, I think of product as product design, engineering, data science, clinical. It's truly all of that when we build. We're now organized around outcomes. What are the goals we're trying to move? And then the teams are set up to go and move against those goals specifically and not told, build this feature, build that feature. They're saying, hey, we have these hypotheses, we're going to test these assumptions, and we're going to truly iterate towards the best outcome we can achieve in those areas. And that's how we've evolved from that feature factory to empowered product organization.
You actually make a good point. Like, it's kind of a negative word. So I do firmly believe that the founders early on, for like a good portion of the early days, should have the perspective on where the product should go. And I even think about like the Brian Chesky model working in some cases, right? Like even a point beyond that where that makes sense.
Kevin, I wanted to ask a question about how you were able to do that. So I think it's really easy to say that, you orient around outcomes, you do discovery. I'm wondering if you could dig a little bit deeper into how you were able to get the findings. Like, was it prototypes? Was it, how did you set up your experiments? Were engineers involved? Because I think some of the struggles that I have is our engineers are really busy building the things. Like, how can you take half their time to do discovery? And so wondering if you could talk a little bit about some of the things that worked for you so that you were able to make the shift.
So when we made the shift and when we moved from feature factory towards empowered product, it's a journey. It wasn't an overnight switch.
Benjamin Walker, I appreciate you, brother. Thank you for all the great videos lately, Al. It's definitely been enlightening. Love all the knowledge you are sharing. Listen, guys, if you think that this is a lot, you haven't seen anything. You have not seen our beautiful stock term. You have not seen the over 2.5 billion outputs of institutionally graded data. We have, like, by the time you go into our stock terminal, you get thousands of pings. The amount of data flowing into your mind, flowing and just literally cutting into your DNA, all writing in scripture. You're about to become wealthy. You're about to make millions. You're about to ship bricks, right? That is what I'm creating. I'm creating a culture of value, right? A creature, just a creature of just intense value. Okay, let's continue.
And it started, Angela, in one specific area where we did have pretty good understanding of instrumentation. We had pretty good metrics. We knew how to measure what we were doing. And we had enough velocity of information that we could run true experiments. We could do A/B tests. So when we were starting in that space, what we were doing is we were setting up each incremental release as an A/B test where you could validate empirically from the product data. One of them was working better than the other. And that was critical for us to be able to go through that step. Now, how did the product organization go about finding those next sets of ideas? Ideas come from everywhere, right? A little bit of my view often is ideas are cheap, execution is hard. So we took ideas from anyone who had them, and we started working towards, I think Teresa Torres does a really good job describing what I think of as a pod triad, iteratively working together, doing customer discovery. I'll note our users are primary care physicians. If you think somebody doesn't have time, meet a primary care physician who's seeing members in a rural clinic. They have less time than anyone you've ever met in your life. So it's not like we were able to go and sit there for hours and do long discovery sessions with them. So we found alternative ways to do that. One, we got lots of user feedback where we could. So when we had opportunities to talk to our users and physicians, we did. Two, we had a lot of internal team members, right? We ran a clinical practice ourselves. So we went and worked within our clinical practice. And very fortunately, those leaders were willing to sit with us and work with us and let us try and iterate through and get discovery with them. And then lastly, we worked with our customer success teams who are out there talking to the physicians, providing a lot of feedback. We talked to our internal clinical teams. I have had the pleasure of having 3 remarkable chief medical officers that I've gotten to work with over my time at Clover, each of them very experienced in primary care, knowing what can work there. So we took all those ideas, and what we tried to really figure out, how do you get all of that together with that pod triad? You need the product person, you need the design leader, you need the engineering and data science partners in there, you need the clinical partners. You got to get them working together to then make informed decisions of what hypotheses are you testing, in which order, and then letting the numbers choose. We have to become unopinionated because the thing that we're trying to do is clear. There's an outcome. So although I might think something's going to work, I am happy to be wrong. I just want to test the hypothesis. I want to see the data. And then we want to say, okay, that worked. Do we understand why? Although that last part's really hard. And that's where often this fails, is you launch an A/B test, everyone's excited that you got a result, and you're like, okay, why? Can you take that learning and apply it to the next thing you're going to build? Sometimes it's obvious. A lot of times it's not clear what happened and caused that. So then decomposing that experiment, making sure you know those things, really becomes powerful. So for us, all the way when we started, we had a clear metric, we had clear goals that we could measure, we had a clear process to measure those goals, and we were ruthlessly transparent and honest. If we failed, we all celebrated that we tried it, and we put it to bed, and we moved on. Let's make sure we learn, let's not do it again. If we were successful, great, let's make sure we know why it worked. How does that reprioritize everything below us? It goes to a bit of the challenge of a feature factor or waterfall process is, I don't know the most impactful things my team is going to ship this year. So if you ask me what we're going to ship in Q4, I have a lot of great ideas. The whole team does. But I want it to be informed based on the learnings that we get of what does work during the course of the year. So we do have a roadmap. We do organize around some of those bets and hypotheses, but we are willing to trade it as we learn new things that help improve the overall outcome for our membership. So if I can identify that diabetes could be treated 3.5 years earlier instead of 3, well, what are we doing to do more of that in more places? And being honest with ourselves of what really is happening there.
Kevin, can you tell us, healthcare product manager is, I don't want to say like completely unique from other product managers, but there's some nuance. Can you talk to us about what a empowered product manager could look like, or what does empowerment look like for a healthcare product manager?
There's the romanticized version of this that we read about on blogs. You get to be the CEO of your product and you get to go do anything you want and make. There is no company in the world that truly does that. And if you do, you've got absolute chaos, right? That's just not actually what empowered product means. Empowered product doesn't mean you get to sit there and do anything you want. What empowered product means is you have a clear objective against which you're working. You have the team and the resources that are set up to move that outcome, and you have a set of guardrails within which you can operate. To me, that's what we focus on when we say empowerment. Empowerment is, let's set the structure up so that you know how to operate and where your bounds are, what your goal is, and then go work ruthlessly against that goal. That, to me, is what empowered product is. Now, in order to be effective at that, in my mind, it's really about thinking hard about knowing who your users are, knowing what your business is, and knowing the intersection of those two. When we build product, we need to ship things that our users love and want to use that make a difference in our business outcomes. So if I ship things that make a difference in our business outcomes, but our users won't use it, not going to be a successful product. If I ship something that our users love, they absolutely love this, but it makes no difference in our business outcomes, again, it doesn't help the business move forward. So the goal in my mind for our product managers and for product managers who want to work in empowered organizations in healthcare, you need to be able to operate in those areas. Do you understand your users? It's hard to know what a doctor thinks. I've worked in healthcare for a long time. I don't pretend at all to do that. I know better than to think I know what being a doctor is. But I do know some things about what doctors do, right? I have lived experiences. I have growth that I've had in those spaces. So knowing where your balances are and what your users are, knowing where you need to interview people, knowing when it's your users versus your expert user, right? A doctor versus your doctors. And then on the other side, you understand the business components. Healthcare economics are a little bit complex. It's not a SaaS software product that you're scaling with an LTV CAC ratio and gross margin in it, the models that many people are familiar with. So I think that becomes the other place of when shipping product in an empowered product organization, you need to know what's going to drive value in the healthcare ecosystem. That's hard, right? If you're we talked a little bit around some of the different organizations that Counterpart supports between payers, between risk-bearing provider groups. I'll note they have different business models. Some of the things we do are going to disproportionately impact one and not the other. Well, how do we think about those trade-offs? What is the differences between those? A big one for us is what is the timeline that the economic benefit of those changes will ultimately reach the user that you're serving? In risk-bearing provider groups, that could be years. CMS, right? We talked about the star rating results from measurement year or from star year 25. That's where Clover was able to achieve industry-leading results. For those that know the healthcare space well enough, know that was actually measurement year 23, meaning visits and members who are in our plan from 2023, and that will impact our payment year in 2026. So that means anything I do today, any feature I ship in my product org today that it moves HEDIS will have absolutely zero economic benefit until 2020. Let's see, we're in 25, so now 2028. That's what my current timeline for HEDIS payoff is. Well, how do you prioritize that? Will have absolutely zero economic benefit. For those that know the healthcare benefit of those changes will ultimately reach the user that you're serving. In risk-bearing provider groups, that could be years. CMS, right? We talked about the star rating results from measurement year or from star year 25. That's where Clover was able to achieve industry-leading results. For those that know the healthcare space well enough, know that was actually measurement year 23, meaning visits and members who are in our plan from 2023, and that will impact our payment year in 2026. So that means anything I do today, any feature I ship in my product org today that it moves HEDIS will have absolutely zero economic benefit until 2020. Let's see, we're in 25, so now 2028. That's what my current timeline for HEDIS payoff is. Well, how do you prioritize that against hospitalization readmission reduction? Well, that's going to happen, hopefully, if we do it well. We're going to reduce hospitalizations tomorrow.
Interesting. Are you hearing that? So we're probably going to get another exponential boost in 2028. Guys, this is a flywheel model. We're going to make a shit ton of money. Oh my God. All right, let's that's where the payoff is going to be. Wow.
Well, there's a lot that goes in there. Well, that's if you're an empowered product manager, unfortunately, my ask to you is you need to understand that a little bit. Now, the balance is, again, in a well-organized team, hopefully not everyone needs to know all of the context for all of those decisions. And that's where the false idea of CEO of the product comes in. At some point, I need people to be at that level. But in a lot of places, hey, let me set up the goals, the structures, the confines for you. So a good example is we have a pod that works on a lot of our stars and HEDIS measures. They're not accountable to the financial impact of those changes 4 years from now. It's just the math is too hard. Instead, we set up local goals for them that make sense. And what we've done at the leadership level and the company level is we've set our investment strategy that we're going to put this amount of investment in those areas. So that's my job, and that's the job of leadership and product leadership, is to work with your company to set your objectives and priorities and then break those down so that empowered product teams truly can execute and operate against those. So I think for an empowered product manager, a lot of the work is figuring out the 80-20 figuring out your user and your business in your area, your domain, right? If I'm that PM, she's working really hard on HEDIS and STARS work. And I think she probably does know, she's wonderful. She knows a lot of this. But also she's probably not going to be the person that knows everything about what is the risk adjustment cycle and how does total cost of care and MedX work and how does physician user experience optimize for all of these different workflows and how does clinical data flow in all of these areas and how there are just so many different domains. A big part of, I think, what becomes successful for early stage or mid-stage product managers is becoming knowledgeable in the domain that you're set up. And in an empowered product organization, hopefully that's one area, and you can really succeed in that. The failure mode often is trying to do everything. I think that's often where the failure comes through, and that's both on leadership level, that's a failure at the leadership level if we don't do a good job setting that for our teams. And then for individual product managers, the failure is trying to be the expert on everything all at once.
I like the way that you frame that. And I think you've hit it a little bit because there is this tension between your short-term investments and then making sure that you're focused on your longer-term initiatives and things that just take a little bit longer to build. One of the things I know we talked about is the McKinsey 3 Horizons framework for being able to manage that. Can you break that down for us and how you think about it and how you use it?
A challenge often is in those different timelines. So the McKinsey 3 Horizons framework is an interesting strategic framework that McKinsey has put out there that I think is really helpful for managing and thinking about your balance of what horizon of work are you impacting. So what they mean by horizon is timeline. So the first horizon are things that are going to impact in the short term, have 6, 12 month type impact. The second is in that medium term, what's 1 to 3 years away. And then the third horizon is what's beyond that. What are the things that we potentially couldn't think of now, but really are probably happening. So if I apply that roughly just as an example today, and I think about generative AI and large language models and where things are going in that space, it's a really helpful framework to say, well, how are we taking those investments and how do we think about them? In the horizon 1, things that are going to impact in the next 6 to 12 months or so, or anything shorter than that, that's where I really want to lean on, and I trust my product teams and organizations. They should be incorporating the thought of where those technologies are today and what can they do for our users in workflow today. I don't need everybody in the organization also at the same time working on Horizon 2 and Horizon 3. Horizon 2 for something like large language models, they're getting a lot better at doing a lot of things. Agents are definitely here today and they're continuing to get more sophisticated. In healthcare, a big piece of that is how are agents incorporating into the workflow of clinical practices. Well, that becomes a bit more of a Horizon 2 framework, right? Those aren't things that are necessarily going to work today in my products and features that I ship. They're things I need to be thinking about in the next little bit. I think most good product managers should be living 80% in Horizon 1, maybe 20% in Horizon 2. You need to be thinking about those. And then ultimately there's Horizon 3 using generative AI and large language models. At some point, we're going to hit AGI. Well, when we hit that, how sophisticated will those models get? My current hypothesis is at some point, they're going to get as smart as humans on all domains. Horizon 3 then is, well, what happens when Dr. Google is a real thing? That's Horizon 3. That's years away.
Guys. I do research in AI. I work with a project with the chief scientific officer for Microsoft. Guys, you guys got to listen to this. He's talking about AGI. Guys, Clover's locked in, and Clover's building the healthcare company of the future that uses AI. I'm telling you guys right now, you really got to see this, guys. This is a big deal. These people, these people are locked in, and they are locked in more than ever. And if you don't see this, then you're blind. You are freaking blind. Whoever sold their shares at 60 cents, holy shit, man. It's the biggest mistake in the history of mistakes. Wow. All right, let's listen.
Well, as an organization, we need to be thinking about all of this. So what we think about in the 3 Horizons framework is where in the organization are we spending what amount of time on each horizon? Pods and what they're working on is largely in Horizon 1 with a little bit to Horizon 2, because as we build product, we don't want to build something that's going to become useless 12 months from now because technology is going to disrupt and change it. We want to make sure that what we're building is forward compatible. But I don't need them saying, well, is this feature useless if at some point OpenAI develops AGI and replaces doctors? That's just too far away for us to strategically be incorporating into our roadmaps. However, as a company, we definitely need to be doing that. So what we've done, and we're a little bit larger than many startups at this point, we're a publicly traded healthcare company. I've got the benefit of a large enough organization. So at the leadership level, what we've done is we've said, what percentage allocation of our investments do we want to make at those levels? We have a team that is working on Horizon 3 things. We're focused on, well, what does happen? What could our user experience look like if we have these truly disruptive changes that are going to come over the next couple of years start to play out? And what they're trying to do is take little bets, little hypotheses, run experiments so that we can learn and then incorporate that into the product and the roadmap and the strategy so that we're getting ready for where those things are going. And so we think about those different horizons.
Listen. Do you really think Humana or United? Do you really think Humana and United are thinking about Horizon 3? Do you really think that these companies are thinking about the future like Clover Health is thinking about? The answer is no.
Horizons. And that then comes back to how the pods are organized in their goals and where they're trying to focus. Most of that work typically is Horizon 1. I think many of us as product, we love spending time on those hypotheticals in the future and where things are going. It's fun to spend your time in Horizon 2 and Horizon 3 for sure. But often they're not ready for mainstream. They're not, and so it's a tension that we want to make sure we're thinking about investing and learning those pieces and incorporating them appropriately into our product roadmap and funding levels.
Kevin, earlier you talked about the HEDIS benchmarks or the HEDIS measures and how that's like kind of a 2 to 3 year game, right? Like you don't really realize the outcome of that investment until 2 to 3 years later. This 3 Horizon McKinsey framework also has like a short, long, middle, long term sort of work horizon. How are you thinking about measuring the outputs of these things? And given your, I initially thought maybe it's like you go 1 and then you're on phase 2, then you're on phase 3. It seems like you're kind of dabbling a little bit in all of them. How do you know that work is like impactful, even in the third bucket where it's like pretty nebulous?
So I think they both have different timelines, but I do think about them a little bit differently. For instance, HEDIS and STARS, there's a long payback period, but really it's a financial modeling exercise to discount those future things to today. Because in that case, in that really that's a payment mechanism that takes a few years to happen. What we are shipping as features do impact real people today and getting better preventative care. So
what did he say? What did he say? What did he say? It's a future model to discount what's done in the future to today's. What does that sound like? The intrinsic value calculation, estimating future free cash flows are discounted at today's present value. That's what we've been basically doing. That's what the stock terminal is all about, is how to basically take all these numbers that you see behind you here, take all these numbers and shoot them 10 years into the future and discount back at 10 to 15% discount rate using a perpetuity model of 2 to what the hell is that freaking like one? Where'd that come from, right? Where's that coming from? What in the freaking God's world is that? All right, anywho, using all that to basically, I don't know what the hell's, I just totally got distracted, right? Taking all that damn thing and going all the way to the future and discounting back at today's present value. The problem is retail investors don't have access to this data. They don't have access to this whole thing. This whole thing, they don't have access to that, right? But I give you access, right? That's why we're going to become multimillionaires. That's why this portfolio is going to shoot up 10, 20, 30, 40, $50 million. And who knows, it might even get to 100 mil, all right? I know it's tough to believe, but I'm telling you, whoever walks the path of Benjamin Graham walks the path of Warren Buffett. But you need to have the data, and I supply the data. You need to have the education. I supply the education. You need to have the research. I supply the research. And you got to have the people. And guess what? We have the people. Let's continue.
So that's what we focus on, is we do break that more complicated payment piece down. And we say, okay, these teams are focused on areas that we can measure in current year. The 3 horizons framing and the multi-year framing on that, it's something that we try to not break down in the same way, right? The HEDIS measures, we could break down those different windows. We could set local goals. We could set, hey, if we move HEDIS this year in this way, I know 2 to 3 years what that's going to look like. It's not perfect. There's a lot of complex modeling. For instance, HEDIS is not an absolute. If I get a certain percentage, what matters is the curve. All of HEDIS is essentially graded against a curve against every other health plan in the country. So my performance is relative to everybody else. So I actually don't know what everybody else is necessarily going to get from a performance perspective. So instead, we break that problem down into local goals and local metrics. We know where we want to be from our performance goals, and we know what's attainable. So let's go make sure that our teams are set up against those goals. On the 3 horizons framework, I don't know what Horizon 3 is going to look like. I consider myself knowledgeable about generative AI and large language models and where the industry is going, and I'm excited by it. I play with all the tools and have all the fun. But I don't know if I could predict when we're going to get to AGI and when that will ultimately get to the point of replacing doctors or something like that. And I'll note, I don't think that's actually going to happen in any realistic, even Horizon 3 timeline, right? I think my opinion, it's going to change the way doctors operate more than it's going to replace them. But what we do is we set percentage of investment goals on that side, because the outcome is learning, right? When you're investing in Horizon 3 activities, our goal is to learn and make sure we're getting those learnings across the organization. So the teams might be working on new LLM frameworks and tools and technologies. They might be working on other investments that we think are really disruptive, where the goal is for them to be able to learn it enough that we can break it down, that our pod can start using in Horizon 1 and Horizon 2, those concepts and ideas to build a better product experience for our users and our business.
Thanks for sharing that, Kevin. One of the things that we'd love to talk to you a little bit about is also, how you go from being a startup senior PM to a startup VP of product. We'd love to
Publicly traded.
Yeah, exactly. You're kind of a big deal.
Not go that far.
Can you tell us a little bit about your career trajectory? And if someone is listening, maybe they're an independent contributor in product, what would you say to them?
There are a couple of things that I've had extreme fortune and luck in. And I think that is true for anyone who's been able to ride a career growth like I've been able to. you've got to meet the confluence of your personal growth, the company's growth, and the product's growth all at the right time. So first, be nice and kind to yourself that you are not the only thing that contributes to what this happens, how this goes. I'm extremely fortunate. I joined Clover at the right moment for my personal growth to match the growth of the company, to match the growth of the product, to match the growth and maturity of the organization, where as I kept maturing and growing professionally, the company needed someone in that next level, and they identified and said, hey, Kevin, you are right for this, let's do this. I've also been fortunate that I had ultimately a very senior leader in Andrew Toy, who's now our CEO, who understood product, who was able to help go through that progression and make sure that I always had those opportunities in front of me. So the first thing is knowing that there are things you can control and there are things you cannot. My career growth, joined as a senior PM, it was a new product. I started as the product manager for our data science and our data platform, and have grown to expand my skill set a lot that I do currently lead our user research team, our design team, our application support, and lead our analytics. That growth has come not because I knew all of those things when I joined, but I was able to learn those as I went. I refined those skills and knowledge, and I was able to incorporate them into my ability as a product manager and a leader. So if you're a current IC, if you're looking to have that growth to get to the senior leadership level, the first is trying to find a fit in a company that will have that growth. Now, good luck. You and every other product manager and every VC in the market is trying to find that. It's not easy. You're just, that's what I mean. There's some luck component there. But the other piece is it takes time. I've been at Clover for 6 years. In hindsight, everyone would look back and be like, wow, look how fast that growth is. It's obvious you should have stayed there. I tried to leave Clover so many times. I almost quit so many times. I've been fortunate that I have had great bosses. Andrew, our chief people officer, Rachel is amazing, have talked me out of that a few times. Because ultimately, the second part that I'd reassure everyone who's going through those progressions, just like there are compounded returns in investments and there are compounded returns in how you do things, your learning compounds. I couldn't possibly be knowledgeable about HEDIS, about total cost of care, about Medicare reimbursement and how bid works and how risk-bearing provider groups work and analytics and product and AI and technology if I had switched 5 times over the last 5 years.
That's what I'm saying. If you stay on a path and master it and be a master in one area, for me, it's technology, it's AI, healthcare, and oil. I know these companies really well. Someone says, Al, what do you think about this biotech stock? I don't know. And I'm happy that I don't know, because I know that I know how to bat. I know a little area that I'm good at, and that's my batting range. That's my batting range, right? How many times did he decide that he almost wanted to quit, right? But he kept on going, right? Because the compound growth, and ladies and gentlemen, this compound growth has been going like this. Remember, 2018, Andrew Toy came on. 2018, 2019, 2020, 2020. Watch. 2018, 2019, 2020, 2021, 2022, 2023, 2024, 2025. It's been 8 freaking years. 8 years. And finally now, ladies and gentlemen, we are starting to see the compounding effects of Clover Health. And there's a lot of idiots out there. Oh, Clover Health is a shitty stock. Clover Health. All of these naysayers are about to shut the hell up, right? Because I've done the calculation. My AI and my software that I built with my hands, right, is and I've been in this industry for 14 years, right? You're about to see the power of our stock trades. You're about to see the power when no one else could see, we could see. When no one else believed, we believed, because we did the math. We did the calculations, and now you're going to start seeing all these institutions come in. You're going to start seeing Daniel Ives coming in from Wedbush saying, this stock is a buy, right? You're going to start seeing that because they come later, right? They come after the fact, right? But when we build a company and when we go ahead and do due diligence, we get you the information before any analyst comes, right? So that's the power of what we're trying to do, right? Let's continue.
I only get that benefit because I'm incrementally building my knowledge on top of my previous knowledge base. So when I get 2% smarter this year, I'm 2% smarter than I was on a compounded basis for 6 years. So I think the other part is it looks bleak. You're going to want to quit. You're going to want to leave. It's human. Look, and at some point it's toxic. It's wrong. Do those things. Don't be afraid to do those things and change. But no, the more often you change, the more often you reset your baseline, you lose the benefit of compounding, and you have to go through a bunch of things again. Just like setting up a new product takes some time to go ask your engineering team how long it takes to spin up a dev environment and get a dev environment going and get your environments working and get your analytics working and get your system running and publish to the DNS and make sure Cloudflare remember to update all your systems. There's a startup time. Well, think about that for your product career. When you go to a new company,
Oh, Angela, you've just switched jobs. You know this right now. It's so hard to get up to speed. You spend 6 to 12 months getting to, I'm not drowning. To be able to get to the learning phase, to be able to contribute at that next level for a company, remember, you've got to provide benefit back to that company at that next level. You've got to get that benefit in time. So it's hard. I think the benefit often is in compounding. I love Angela Duckworth and Grit and the way that she talks about this. There's a bit of that. And I'll admit, a lot of luck that if you're gritty and you stay at the right company, it ultimately is successful, and not that you stayed at the right company and you were gritty and ultimately the company failed. Although you can get a lot of learnings out of those failures, but it's hard then to have as much career progression necessarily in those scenarios. So I think there's a tough balance there, and I'm very empathetic to all of my peers and friends. I've got tons of friends that, if I look back 6 years ago, we were all equal. I don't think I'm disproportionately better than many of them or any of them. I hit the right company at the right time where my skill sets grew at the right way to get me to the right opportunity. I'm proud of what I did, but I know I could have been the same, switching jobs every couple of years and been unfortunate that my startups kept failing. So I kind of hitched to the right wagon and got to ride that rocket ship. And I invested in myself. I grew. I learned the things I needed to do and got better over that time as well.
I was clapping. I was on mute, but I was clapping for parts of that. I especially laughed when you were like, I tried to quit so many times, because I recall moments where when I was an ICPM at a really fast growing startup, it'd be Friday and like I'd spitefully submit an application to another company. It'd be like 9 p.m. on a Friday, and I just wrapped up work and I'm like, let me just put some apps in somewhere. And by Monday, like clarity had kind of like settled in. I'm like, no, I can do this again. And that went on for a while before it was like not drowning, as you would phrase it.
It's very real, and it's human. It's okay, right? I talk to my team about this all the time. It's not your job as the individual or the employee to be committed that your opportunity is in front of you.
Mm-hmm.
It's the company's job to make sure there's an opportunity in front of you that matches your growth and your opportunities and all of that. But also, you've got to be there for that opportunity to exist.
Right. You said something really cool, and you kind of preempted the question, but I'm going to ask it anyways. You said you found a company and you matched its growth and trajectory. So you kind of grew with the company. For the ICPMs who are listening to this, if you were to give advice on how to kind of gauge or identify these companies, what are the signals or the things to look for?
As I think about the opportunities, the signals that you're looking for is the stage of the company, is the maturity of the organization that exists there. And what you're trying to find is somewhere that 2 or 3 years from now will grow to some degree that they're going to need more senior roles, right? Product is tough. We're a pretty flat hierarchy. Especially the last couple of years, there's been the reculling of orgs that have grown with managers and managers and managers and managers. That's not effective. There are other ways to operate. I think that's a lot of where Marty Kagan and the product model really fit in, is organizing by pods and teams means you need less of these managers handing down requirements and teams are able to go execute. Well, that means there's just fewer layers of leadership opportunity that exist at most companies. So you need to find a company that's going to have that growth stage step where you could be that person. So there are 2 styles of that I end up seeing a lot of people considering, and I've considered, is one where they're hiring a senior PM or a PM, where your hope is you can become the VP in a little bit, but they don't have one. That can be a path. You can definitely do that. If you're doing that, what I'd make sure you're thinking about is, what's the timeline that they're going to need that VP? And will you be able to demonstrate in the short period of time, not your command as a senior PM? Because what a senior PM does and what a VP do are different roles. You're going to have to be able to show that you can do the VP role. So you're going to need to be able to demonstrate that to that company. Well, the alternative path, also challenging. You join a senior PM, you've got a great product leadership and others. How long will those product leadership people be in their roles? They could progress, right? This has happened for me. I've gotten more and more senior. I was a director at one point, and then I got promoted, and well, now I've hired directors. So one way is I grew. So at a startup, your VP or your product leader could grow, and there could be new room under them. Or at some point they'll leave, and then you would be eligible to get their role. So those are the 2 things, like as far as I can tell, that you could possibly get to those types of growth paths. So what you're looking for typically is, I think, a mid-stage company. Right? If you're going really early stage, your only job in product is product market fit. Can you run tons of experiments to see if something sticks? That's a really important skill set. You need that at every company at every scale, but that's early stage what you're going to look for. I think most people looking for that type of career progression, usually your senior PMs, you want to find an organization that has product, that has some systems in place, where either there's an opportunity for you to become the leader over time because there's not someone there, or there's a path for you to follow a leader and ultimately replace a leader who's in that current seat.
Kevin, if I am an individual contributor, I'm at a startup, we are a feature factory, what do I do? Because I do want to become a leader. Maybe I'm a little bit impatient. I want to get things going. I want to sort of approve my worth. What are your recommendations?
The first recommendation is make sure you align with your senior leadership, usually your CEO, around, are you ready as an organization to start moving into that model? Because you can do it yourself. You can live within a feature factory and try to optimize yourself. But what will happen is you'll run into roadblock after roadblock after roadblock. The first step is to try to align with senior leadership. Hey, can we find a place that we can test this new way of working? That you have a clear goal that your business leader is excited to see moving. There's going to be somewhere, right? If you're at a consumer digital health company, it's going to be on customer acquisition. You kind of gotten past that hump. You're a later stage company. You no longer have product market fit questions. It's, can you optimize it? Great, go to that spot. If you're at a value-based care organization, can you figure out something in your data systems to be more efficient? Or find a place where there's a clear goal that the business wants to move something forward on, and propose operating in that space as the place that you're going to start. If you get the CEO level buy-in, or your senior leadership, if they can get that buy-in for you, and then set a goal. What are we trying to do? It can't be a nebulous thing. There really need to be some numbers, Because if it's nebulous, it's hard to prove it's working or not. So find a goal, find a metric, find a place that you could start optimizing, and then start organizing your work around that way of thinking. What is the metric? Make sure you understand how the things move. What are the levers that move that metric? And then start building a backlog of bets that you can quickly and iteratively test. If you start building a 6-month roadmap, you're done. You're never going to get the time and the buy-in from the organization to go for 6 months when you're a feature factory on one idea. What can you ship this week? Even better, what can you ship today that you can measure? Start small. Don't say, I'm going to restructure the entire platform to do this new thing. Start with, here's an idea. We're going to test it. We're going to learn from it. And we're going to show the results. Well, now the hard part is you've got to now have 10 more of those ideas ready, because tomorrow you're going to do it again. And then again, and again, and again. And you're going to build the intuition of the organization. You're going to build the results. So your goal, if you're a senior PM, you're joining that company, you want to be the rocket ship, you want to be the catalyst for growth. What the company needs is a product organization that can operate as a product organization where the CEO doesn't have to be the feature factory.
You want to be the rocket ship. You want to be, listen, guys, listen. Okay. Give me a moment for a sec. All right. Listen, guys, listen. I go back to what the quote is from Vivek. He believes that Clover could accrue the largest market cap in the history of any company that exists today. Now, the market cap for United is 250, right? It used to be 500. Now, if this is the case and they're building the future of healthcare, then we could potentially see $1,000 stock price in the future if they do build, and this does become essential, right? Potentially, I would say anywhere between $100 to $500, I would say, in the next 15 years, okay? Which is why people that sell at 3 or 4 or 5, they're basically selling pennies right now. You guys are playing marbles. You guys are not seeing the bigger picture here. Now you understand when I tell you that my stock terminal in my lifetime access is going to be $25,000 initiation fee, no more lifetime access, and a $10,000 to $15,000 yearly access to be part of the group. Are you starting to see that? Are you starting to see that right now? What I'm doing is I'm assembling my team. That right now we have the SaaS deal that gives you lifetime access. We have lifetime access for now. And all the people that join are going to be grandfathered in lifetime access. And these are going to be the group of people that we're going to have hundreds of millions of dollars, even in the billions. In the billions. We're going to be doing the wheel strategy. Imagine making $5 million a month, taking that and buying properties everywhere, buying properties, differentiating in different models, having and buying treasuries, or doing the yin or doing the Chinese trade, right? Taking your properties and doing a Japanese trade, right? Leveraging your assets to go ahead, borrow money from the Japanese government at a point less than 1%, invest in a dividend paying asset that gives you 4 to 10% in dividends. Yes, Warren Buffett just did that. That's how he was able to turn 5 billion into like 15 billion. There's a lot of ways out there to make money. And that's the group that I'm building. That's the group that I'm building. Right now, for a short period of time, we are having this lifetime access. Prices will go up, but in the end, we will close off the lifetime access doors, and everyone who joined our team will be grandfathered in, because this team will be able to essentially teach and be able to have, let's say, the technology guys are going to look at tech stocks. You have the oil field guys. We have the, food guys, because people still need burgers. The burger company ain't going to go out of business, right? The basic stocks, the Coca-Colas. You're starting to see what we're creating here. You're starting to see that in the end, ladies and gentlemen, we're going to have a group composed of multi-millionaires. And we already have a net worth of $45 million plus already, right? Imagine once this stock appreciates in value, when Mr. Market starts to realize, right, what this value of the company is, right? Right? Al is a data dealer. That's what I do. I give you the data, but I teach you how to use the data. And later on, we're going to be coming together as a group to essentially, whenever the stock market goes down, VIX goes over 50, we're going to be ready. We're going to have the cash. We're going to be able to make hundreds of thousands and millions of dollars every month and do the wheel strategy. You understand where this is going? Yes, this is real. Yes, this is what I'm creating. I have no competitors, as what Sean was saying. I have no competitors. No one is willing to do what I'm doing because it takes a lot of work. It takes a lot of work, and no one understands the stock market like I do, right? It took me 14 to 15 years to get where I'm at now. And now we're having people that join Lifetime Access. They start doing intrinsic value calculations within day one. That's the power of the software that I went ahead and did. So many new companies out there who have fresh and new ideas. Exactly. And then our people in our Lifetime Access is using our AI stock terminal to find the AI summaries, to find companies that become triple dragons, companies that are emerging dragons. This is a big deal, right? This is a big deal. So I'm very excited. I'm going all in on this, as you guys can see. I'm invested 120% in every Lifetime Access member because I want to take you to be better than me, right? That is my goal. And then you know that there's no other place for you to go. So people stay. People stay because they know the mission. And they know that why take what I taught you and go somewhere else? There's no point. That's why our main users, our OGs, stay. Because there's no other place out there that does what we're doing. We are a hub. We are a family, which is why Lifetime Access is going to go up. Not only is the data expensive and we keep innovating, we also want to make sure later on, once we close Lifetime Access, we have an initiation fee. So we don't bring in people that want to go to the moon people. No, we want people that are real, people that they like to work hard, right? It is going to be a privilege to be part of our community, right? See here. One day, was it Al will be free? I can always dream. AI? Oh, AI? Oh, you're scary, man. You want AI to be free? Jesus. I don't think so, man. I think they're going to come after us. They're going to try to kill us. That's what right? Like, oh, you humans, you disgusting. It'll be like that Iron Man, Age of Ultron. Clove at $3.38. Don't talk to me until it's $3.50. Al doesn't only deal data, but also teaches how to get high on it. There it is, right? I'll teach you how to get high on this data and how to make money. I'm telling you, you guys are about to shit bricks to all the Lifetime Access members. You're going to shit so much bricks that your wives are going to be like, their friends are going to say, what does your husband do? It's going to be like an episode of Breaking Bad. You're going to have so much cash that every time you go to the bank, they're going to say, welcome, sir. Well, they do this all the time with me, They say, welcome, sir. Please sit down. I see you have a lot of cash coming in and you're very successful. Would you like to speak to our financial advisors on how they can help you use this cash to your advantage? Because one day you're going to retire, sir. Please speak to our financial advisors in our executive suite. Please, would you like some Perrier? And I look at them. I'm like, you're a financial. Yeah, I almost, what I should do? I should do a live showing this and showing the financial advisor teaching me about investing. I'm like, so what's a stock? And just like interview this financial advisor, acting like I don't know shit about stocks, right? All he has to do is Google my name and he figure it out. Like, oh, this guy's a financial. I'm like, oh, I don't know, sir. Can you teach me? What is a share? What is a stock? What is that? Right? I'm with you. Got my buy order. Oh, that's pretty low. I don't know if it gets there. Holy crap. Here's some popcorn, right? Daniel Ives doesn't even know we're having a party. Exactly. Counterpart Health can potentially be so big that it might eat Clover Health's MA business. That's what the VP meant. Yeah, absolutely. Yes. Yes. You see that? That's huge. Huge. That would be awesome, Al. Do it with the Google glasses, right? Right? Like, so what's a share, sir? What is that? Well, sir, it's this and that. I'm like, well, isn't stock market gambling. Can you tell me a little bit more about that, sir? Right? My dog's freaking out, right? There's some, UnitedHealthcare holders outside. I'm just kidding. No, that's terrible. He's like, what? You should be holding Clover. What are you doing? Right? Let's go back to the podcast. It's a long podcast.
Your job is to show you can help the organization do it. The way to help do it is by proving in your domain that you're working on, you can achieve those results, and that you can set the system up as you're going, that other teams can start replicating that model. So that is really that key. And so my recommendation, and this is how we did it, this is how, as a product leader, I helped get our organization there. Back to the trying to quit. I went to Andrew, I said, hey, I think I'm done here. Like, I just don't know how to, like, you don't need me anymore. And he was right. He was right. I don't need to be there. He had all the ideas. If you just wanted executors, let me build a team of executors and keep running that way. But his goal was to scale the team and to grow the org, to build what now is Counterpart. And he said, no, I need a product function that can run like a mature product function. So we started. We picked a number. We started operating that way. We were aligned. Although I don't recommend going to your boss and saying, I'm going to quit if you don't do this. That doesn't actually work. Ultimatums are bad. But finding the framing to get that buy-in, get the support. And it takes time. Although for me, I was 3 years in before we even got to that point. I built a lot of credibility and trust within the organization. They saw the results we could deliver, and we were empowered then with a small place. But we proved it, and we proved it. And then for me, as any ICPM does go through that growth, I was set up then to be able to take that model, replicate it, and scale it. That became my new role as product. Because again, being a really good senior ICPM is not the same skill set as being a director. It's not the same skill set as being a VP. So how did I apply and grow into the next step of getting other people to be able to replicate those skills and build that model? How did I set up the team to go and do those things? Because in an empowered product organization, I can't do it myself anymore. The goal is each of those teams are set up to do it. And so it's an IC going through that progression. That's really the key.
Kevin, so this is all very exciting. Got a lot of information here. What's next for Counterpart? What should the audience be on the lookout for?
Counterpart's growing. We've got a lot of growth. It's an exciting time for us as a product and a team and an organization. Our public results, again, continue to underscore the performance of our product, which is leading a lot of, on the go-to-market side, a lot of people to come to us asking for ways to apply what our technology does. So I think next for us is you're going to see more and more, hopefully, announcements of new customers and new pilots and new programs continuing to spin up, and more members that we can ultimately support in our mission to improve every life. So that's what we're excited for. From a product and technology perspective, we talked a little bit around the 3 horizons and where Gen AI and large language models are in machine learning. We're a machine learning native company. We built a lot of machine learning and AI. And so from a product perspective, we're focused a lot on how do we make those tools work effectively for primary care practices? How do we make those work effectively for patient care? We focus a lot on safety. We focus a lot on doing those in ways that are explainable, understandable, and truly can deliver impact. But there's a lot there, and we're leveraging a lot of that technology internally. And it's really exciting for us to keep seeing what can happen on that front. So on the business side, a lot more growth, a lot of opportunity for us to keep going in those sides. From a product perspective, I'm very excited about continuing to incorporate artificial intelligence, Gen AI, and other technologies into the workflow in ways that truly improve primary care efficiency, improve the joy of medicine. Doctors are often dealing with a really shitty environment of technology. How do we make that not shitty for them and make them really feel the passion again of that human connection of what doctors are just incredible at, which is truly helping us stay healthy and get healthy when we have a problem? And how do we as a technology company support them?
All right. Let's see. There still might be more.
Called LNO. It's a way to think about how much time and how much effort you're putting into different work that you're doing as an individual. I still use this framework myself as a VP and leader. I think ICPMs benefit a lot out of thinking of this. I think that leads naturally into empowered product organizations thinking about now, next, and later, and how you think about those different frameworks and when you're investing in different areas. How much time and effort that you put in is leverage work, how much time and effort you put in that's neutral work, and how much time is overhead. Make sure you're investing your personal time appropriately in the areas that are leverage, neutral, or overhead. And so I love that framework.
What is a tool that is highly valuable to you that you think others may not be using?
I am an Arc fanboy. I truly love Arc as a browser. I think it's awesome. I just think the UX is really slick and easy. There's a bunch of things that it does really well. As a lot of PMs and other team members have, you've got all these different profiles. You got to log into all these different things. It allows you to have different profiles and do those things. So you can switch through it, and it doesn't keep state from Okta from one browser to the other. It's cool. It's got some cool stuff in there. So I'm a big fan of Arc. I'm an analytics person. I love numbers. I'm a pretty big fan of Mode Analytics. It's a cool tool for like iterative BI type stuff. You want to do some SQL exploration. You want to visualize it pretty quickly. It works well there. It's not a true enterprise business intelligence solution. They might say it is, but I don't think it is. But it's another cool one that I find useful.
Are there any concepts in healthcare that excite you at the moment?
I am deeply passionate about value-based care. I think that's what we're working on. I believe that truly is a powerful way to keep moving the healthcare system forward and improving overall business results. I do love ICHRAs as a model. I think we have a problem in the US about how healthcare works and you're connected to your employer. ICHRA is an interesting model to move away from that, specifically because it can hopefully help change the way that we as organizations think about investing in preventative care. As a health payer, I can only do that if I'm going to be around as your payer in 3 years to get the benefit. ICHRAs allow that timeline to change potentially. So I'm excited about that opportunity.
Do you think product management is a science or an art?
As everyone's always going to say, it's both. I think it depends really, though, on what type of product you're building and in which stage. If you're Google search optimization, it better be science. You better be applying rigorous A/B testing and processes and growth analytics, right? If you're in growth side, like there are places. If you're a pre-product market fit, it's all art. You're guessing. You're throwing spaghetti against the wall and hoping something sticks. So I think it's both, but the important job as a PM is to think about when you're leveraging which of those skills.
And lastly, where can people get in touch with you? And do you have any shameless plugs?
If anyone is interested in product, we are hiring on the Counterpart team, so please do apply. We've got product managers, leader roles, we've got engineering, data science, a bunch. We're continuing to grow. So always a shameless plug. Please reach out, and our careers team and talent team are wonderful. They'll help with that. I'm on LinkedIn. You can find me. I'm Kevin Holub at LinkedIn. I'm a lurker on X. I follow a lot, but I'm always terrified to jump into the fray there. So you'll see me every once in a while with a repost, but nothing more than that, really.
Kevin, thank you so much for joining us today. This is wonderful.
Just more than a repost. That's so funny. Yeah, he probably sees us talking. You know, he probably was watching us right now, watching him. Kind of weird, huh? All right. So, guys, let's go ahead and remove this and share the screen real quick and just kind of close off here. First off, just want to say thank you. We got about 507 people now, 510, about 428 people on X, 79 people on YouTube. Want to say thank you guys for your support of the channel. Please give us a like, comment, and subscribe. It helps with the growth of our channel. Appreciate you guys. It's very exciting to see where we're headed in regards to Clover. We are getting a lot of institutional buys right now. I'm very excited. We were at 24.19 and then we jumped to 24.35. And there's just a lot of things happening, guys. And ultimately, it's all about that free cash flow, right? And we're getting there. We're slowly getting there. So for individuals that are interested, please take advantage of our SaaS sale, right? Please take advantage. There's nothing out there like this. We have the promised land. We have the data. If you ever wanted to wonder what the stock market is, am I investing at a good price? What's the actual value of the stock? How are these analysts set their price targets? My software tells you exactly what the stock price is, and our people will help you determine what to create assumptions to put in the intrinsic value is, so you can generate the best stock, the best price target, even better than what a Bloomberg terminal can give you. We have one of the best platforms on the market right now. The best data analytics software. We have the best, right? And now let's just let the results, and you see, what I did is I was like, you know what? To showcase that the software works, I'm going to go ahead and show. We've already called out Palantir at $6.50. Oh, well, now it's over 100, right? Hims was at 24. Now it's over 50, right? What else, right? We called out so many stocks, right? You've seen it's Meta, right? We called it around, $90. Like, this is a $600 stock, right? Boom, right? And now, the argument is, well, everyone knows these stocks. Well, now there is no more excuse. No one else out there is talking about Clover. I'm the only one. Obviously, we got Gun Show Trader, we got all the market cap, but I'm the only one on YouTube telling you, showing you the value. And you're going to over time see that what I've been saying and all I've been doing is using software. That's all I've been doing is using my software. Instead of me keeping the software to myself and profiting on myself only, I'm sharing the software with all of you. Because I need more people, so when there's recessions, I'm able to say, you look at oil, you look at this, whatever your passions are. Oh, hey, Al, I'm a pilot. There's a lot of things happening in United Airlines right now, or I work at Delta. There's a lot of things that you see what you can bring to the table. You see the power of what we're trying to do. This is like a GPS. People that don't have this will crash and burn. So that's all I have to say. Over time, you'll see. I have over 800 videos about Clover Health and beyond and all the other stocks. And you're going to see right now how I use my software to be able to create something of value, to show you that the product that I created works. Almost like the Clover Health using Counterpart Assistant to showcase that the Clover Assistant works. They use the Clover Assistant as the example. Now you can see this is my assistant, and you can have it too. Plain and simple. God bless you all. I'll see you on the next one. Appreciate you. You know, and you were one of my first customers. You were one of my first clients to join the Al Stock Trades platform way back. You can see his testimonial video back on at alstocktrades.com, right? He's the one who has the painting in the back, right? You were the first one of the first people that believed in me, right? And now you can see the people that join our platform stay. When I say lifetime access, I mean lifetime access, right? In the future, we will reach a carrying capacity where I'll have to stop it, because any more will disrupt our group. Then it'll just be, because there's a level that once we hit, we're gonna have to cut. And trust me, this is not a money game. All money gets invested into Al Stock Trades, into the software. You already see I'm a multimillionaire, and soon you'll see I'm going to be a mega multimillionaire. All right, what is perpetual growth rate that is assumed and calculating intrinsic value on the platform? So it's anywhere around 2 to 3%, right? That's historic, right? Around 2 to 3% is what we do, and we can also base it off inflation, right? Because inflation is around 2 to 3%. There it is. 3D Machines appreciate you, and there it is, right there. One of my first clients, and I promised you, like I promised you since the beginning that you came, I said that I'm going to earn your trust and respect every single day. Every single day, right? It's not just Tuesday or Thursday. It's every single day, okay? Right? Now, we're going to be talking about, we have a section on our platform about space stocks, because that's going to be the iteration. That's going to be the next level. But I think we're a little too early on that, right? Clover's at 340. What's the portfolio right now? We are up $23,000 today. We were down 40,000. You add 40,000 to 22,000. We went up like 60, 70K today, right? While United's still down. Ladies and gentlemen, this opportunity won't last for a long time. Take advantage. Join a platform that works. Join a platform that'll take you from zero to hero. Join a platform that will actually put money back in your wallet. God bless you all, and I will see you on the next one.